Maybe that's a longer story, a longer-term story, watching for those shipping routes to be eventually perhaps reopened. And BMW certainly very much in focus. They have put out numbers to the markets. The auto margin coming in above estimates. But there are these lines about how they're excluding a lot of the tariff impacts, so we'll keep an eye on what exactly is and is not included within these numbers then, Guy.
Yeah, what do you make of that? What do you do with the stock? Do you just, as Critty says, maybe sit on your hands on that one? Keep an eye on BAE Systems this morning. There's lots of other names that you want to be focusing on. Orsted's another one. So single stocks are definitely going to be in focus. Let's see how it all factors into the opening trade this morning. London coming through a little bit light. We're down by around 0.2%. As I say, you've got BAE Systems to fold into the narrative this morning. You've got the whole wind story in the UK. You've got trade deals to think about as well when it comes to the UK. But we're down by 0.2%. The 600's down by 0.2% as well. Trying to figure out and fold in all of the news this morning. The market's a weighing mechanism. How is it weighing up all these different factors and putting importance to them? The IBEX is down by only 0.1%, which is a surprise given what happened with Barcelona last night, but we'll come back to that story a little bit later. The CAC 40 is down by 0.4%. How will PSG do against Arsenal? We're down this morning. I joke because actually, to be honest, there's so much going on, and trying to get an understanding of how it all relates this morning I think is quite hard. Taking a step back, trying to figure out what the bigger picture is, the theme that still throws through the earnings is what is happening with the tariff story. Some companies are compensating for it. Other companies are basically saying we're going to stick to our guidance because we simply don't know. And this feels this morning maybe like a don't know market. Critty, what does that mean for the sectors?
Well, I think when looking at healthcare, they very much do know, in that you are seeing quite a bit of pressure in terms of the weights this morning, read across the screen fairly broadly. But I think the healthcare space is really taking a beating as a sector, down about 1.5%. From an individual mover perspective, you're looking at the likes of AstraZeneca, Novartis, Roche, Sanofi, GSK, all your five biggest weights on the stock 600 this morning. Novo Nordisk, though, having a good day. So perhaps that is the trade there, that if Novo has a good day, the rest don't.
Yeah, I mean, this takes us back perhaps to what we were hearing from Joe Easton just ahead of the open. He was talking about some negativity surrounding some vaccine makers out of the US, and that was reflected in some of the European stocks ADRs overnight, and now that coming through into European session. GSK was one he flagged, and that is indeed down by 3.5%. So perhaps it is that rather than the news around Novo, which seems to have been kind of brushed off. So that the thing that is affecting European drug makers, they followed their US peers lower due to somebody who was appointed to a key role and the background he has. So we'll certainly dig into that one.
Does that mean the Novo move even better? So you could argue that Novo is only up by, it looks like it's not up by much. It's obviously a huge weight to the upside in terms of the index, but the rest of the sector's down. So you could argue in some ways, actually, that outperformance looks even more maybe dramatic on the upside that it's able to achieve that. I'm taking the positive spin on this. This is a stock that's obviously been hit hard of late. I think we came into the beginning of the year as its most expensive, Europe's most expensive company. I think if it had dropped this morning, it may have dropped below MS. It's already dropped below a whole load of other stocks as well. In the luxury space.
And what they said didn't sound all that positive this morning, talking about GLP-1 compounders and how much of the market they've taken.
I mean, the generic story in the States has been a long-going one. There's a couple other ones to keep an eye out here for. Maersk, for example, is down about 5.5%. You're seeing BMW actually higher this morning by about 2.3%. Some comments from the CFO hitting the wire just earlier, where he's talking about the fact that the tariff impact on the first quarter is minimal, going as far as to say they're expecting tariff reductions as soon as July. I think this is the most optimistic mood music we've heard from an automaker.
Why is Maersk down by? That's I just want to check that it's not gone ex-dividend.
We're doing the math live on the air, folks.
Just want to check that it doesn't look like it's gone ex-dividend to me. So I would have thought the shippers would be up today on the Red Sea stuff.
But if it's something that pulls down shipping rates, that's
true. No.
That's
That's how you want to be thinking about this. No, you're absolutely right.
The weird way that shipping companies respond.
This is bad news is good news.
Yeah,
good
absolutely.
news is bad news.
But you flagged that it might be a mover, and I wasn't sure it would be, but it certainly is, down by 6%, more than 6% this morning. Let's bring in Monica Defend, head of Amundi Investment Institute. Monica, help us cut through some of the short-term noise in these markets. There seems a lot of it this morning. The big picture, I suppose, positive, and this is reflected in US futures, even not so much in European stocks, is that we are finally going to see the US and China talk about trade. We have a confirmation that conversation will take place in Switzerland over the weekend. But what kind of expectation should we have around that? How much of the damage is already done, I suppose?
Well, the damage that has been done, I think we're going to see it in the coming data, and probably we will see the hard and soft data gap closing over time. Then it is a good news, and it's a first step towards something that the current situation, I mean, it's unsustainable. This has been said quite vocal and loud at the IMF 2 weeks ago. Having said that, my expectation is that this is just a first step. And again, I tend to rely to what Bessent said 2 weeks ago and repeated yesterday at the Milken conference. This is a 2 to 3 years deal in order to get all of the issues solved between US and China. So nice direction, but the final destination is far away.
Right. So, I mean, 2 to 3 years, that's quite a long time for talks to take place. Do you invest in that theme? Do you invest in a different, evolving relationship between China and the US? Or do you just park that and say, look, I'm investing in Europe right now?
We're trying really on one side to get the big picture on the trade fragmentation and these new geoeconomics shapes that is taken, where definitely we will see some winners and losers, and probably it won't really be about the regional top-down asset allocation with big directional bets, but more at sectors. Okay. And the reason being that tariffs are going to focus on sectors.
What is the secret sauce to outperforming right now? To just gaining a little bit of alpha when everyone else is, to quote Guy, sitting on their hands?
Well, we've seen these big outflows that started back in December from the US into Europe. Definitely Europe is a region that might be a winner, given what is happening in Europe per se, how the plans in Germany will deploy with infrastructure and defense, and really the ability to recover on productivity, I think is positive. It is positive that the euro is gaining traction versus the US dollar, because this is leaving the ECB the space not to be that under pressure on inflation. Okay. So there are some stars aligning in Europe.
How much of that kind of move or sustained move into the European picture, though, is going to be dealing with ultimately headwinds from a stronger euro?
It depends on how strong the euro will be, because we need to keep in mind that we are an export-driven region. So far, so good. We have as a target 124 as a target versus the US dollar. So as long as we stay around there, we think things will hold.
Year to date, if you're a US dollar investor, the DAX, and I currency convert on the Bloomberg, is up by 28% year to date for a dollar investor. If the euro keeps appreciating, does that story become better and better and better? How much of this is just a simple currency trade that the DAX is up nicely. It's up by 17% nearly in euro terms. It's up by 28% in dollar terms. How should US investors be thinking about the currency in terms of their options elsewhere around the world?
I would distinguish the equity market from the fixed income market when it goes to currency. So the U.S. equity market will stay exceptional just because they have these pretty things that is called technology, and technology will be the long-term win for the U.S. economy and the stock market. When it goes to fixed income, probably is more clear that the European market is more applicable than the U.S. market. So I would say probably the currency will play out in the fixed income. On the equity side, I would stay cautious.
Okay. Just investigate that a little bit more. So the NASDAQ, for a euro investor, is down by 16% year to date. The US is exceptional. It has all this great technology. How much of that, though, is going to be undermined by a weaker currency? I need to think in absolute terms here. I need to think about what is happening with my overall investment. If I'm gaining on the technology front but losing on the currency front, how should I be thinking about the US exceptionalism story? Because it feels exceptional from a technology point of view, but it doesn't feel exceptional from a currency point of view. Is that just balance those out?
But it's a matter of time horizon. So
sure.
the technological composition, the sector is a long-term story. On the currency, for how long this will play out is. So
you don't think the currency is a longer-term story? You don't think that's a structural headwind that's going to be there for a while? I
think that on the currency, it's really a bit too early to say whether the US dollar will step down as a reserve currency. Come on, we're just 100 days in this new administration. So it will require some time to rebalance and to say whether the euro can really replace the US dollar as the reserve currency.
You've been doing a lot of thinking. So maybe the dollar is something we can't necessarily be convinced about the direction, but you've been doing a lot of thinking about the next decade in some of your recent reports, Monica, and talking about AI productivity. AI was something we were talking about a lot at the end of last year, and occasionally it gets back on our agenda, but we're so distracted by trade. What do we need to assume about AI over the next decade, and productivity in particular?
Well, for us, really, AI is going to drift productivity higher, both in the US and in the rest of the world, depending on the plans on infrastructure, because you need really to support the AI development, and definitely the US is ahead. But we are seeing some other competitors stepping in. Think about India. So it will be kind of a bell distribution where you see some early joiners and some late comers, but the direction of travel is definitely positive.
In terms of how you think longer term, there's been this kind of big shift globally, and we're trying to still to understand it. You just said a moment ago you think we're in the early stages of this. What's your level of understanding at the moment? What's your level of confidence? What's your level? A lot of thinking is happening right now, but how close do you think we are to kind of an answer as to what happens next?
Well, I would love to give you a very honest answer. I don't know. I mean, there is just so much uncertainty, and policy uncertainty probably is even worse than tariff per se. So when I was in Washington 2 weeks ago, seeing how people were disoriented about what is happening at institutional level was for me even more worrisome than the level of tariff. At the point when you know the tariff are there, they are targeting this sector, you adjust. But on this policy uncertainty, how much will be in, how much will be out, this is really making impossible to make plausible forecasts.
So do I just wait? Do I just wait and see?
So what we do is try to pencil down the assumption and try to see the transmission mechanism from here to there, and try to size the level of pain. But for the time being, when it goes to the asset allocation, I would stay cautious.
Nice to see you. Thanks for stopping by to come and see us. Greatly appreciated. Monica Defend, head of the Amundi Investment Institute. Thank you very much indeed. Core 6 looks like this. This is what we have this morning. Novo obviously is a big focus, and it is up. It's up even more than when we last checked. Up over 2% right now. LVMH is doing absolutely nothing. Ferrari's a little stronger. ASML not doing a great deal. Schneider's down by 0.7%. Nestle's up 0.7%. Does that make it a defensive market this morning if Nestle's up? I don't know. Novo is probably one of the standout stories, and I suspect that Joe is getting a bit of spend a bit of time talking about it. Plus also the shippers this morning, Joe. Quite a big reaction.
Absolutely, guys. So big move in the shipping stocks. AP Moller Maersk, actually the worst performer at the open of trading. It is down currently 4.8%. Hapag-Lloyd down 4.5% as well, potentially trimming a little bit of losses. But this is news that the US is going to stop bombing the Houthi rebels. This after a deal was brokered by Oman, according to news last night, and that meaning, as was discussed on the show a moment ago, that potentially shipping rates will come under further pressure as the disruption of the Houthi strikes had caused shipping rates to rise, given ships were having to take a longer route around Africa to get to the US from Asia and to Europe. And therefore, this is actually seen as negative for shipping profits. Kind of a little bit of a perverse situation in that sense, in that the rates coming down. Negative for AP Moller Maersk and Hapag. Then in terms of pharma, under pressure, Novo, of course, has the numbers out, but this is after news of a new appointment in the US, the Biologics and Research Center in the US, getting a new head. Vinay Prasad is named as the top official there, and he has been a vocal critic of vaccines, including the COVID vaccine for children, and also just generally negative on the approval process for drugs in the US, and therefore we're seeing that sector declining today. Glaxo down 4%, Sanofi, Astra, Novartis, all of the stocks with big US exposure coming down on that news today. Then we've got the earnings from BMW, an earnings drop, but as we see there, the stock actually higher, so going the wrong way. That is because the margin outlet looking a bit better for BMW. The margin's actually taking the shine today instead of the sales slump. Sales are down around 20% in the last quarter on competition, but that is not the main driver today. Then, in terms of Pandora, all those shiny charm bracelets, they are facing a risk of tariffs, of course, tariffs on Thailand, where they make all those bracelets. But actually, again, it seems to be a margin story. The margin's actually not looking too bad today. So Pandora coming out, that was up around 5%, coming off a little bit, but still not a bad move, given the headline there, cutting its profit guidance, but still managing to rise 2%, not too bad for Pandora. Then finally, a couple more in grocery. We've got a hold over in the Netherlands. That's a big US exposure and faced a hit from the declining US dollar. But actually, that stock, you may have to take my word for it for a minute, that stock is higher. It was up around 5% in Amsterdam. Well, there it is down the bottom there, so we have got it on the screen, up 5% for a hold. And finally, the other one I was looking at was Hensoldt. That was in the defence space, a big jump in orders, unsurprising given the geopolitical landscape. We've got that down the bottom of the screen there, up 6.9% for Hensoldt in the defence space in Germany, another mover in European markets this morning.
Joe, thank you. Joe Easton, with all of those movers. A lot of stocks on the move as a result of their earnings. Other news reports will continue to track the path of all of them. Coming up, Novo Nordisk disappoints as the drug maker's blockbuster weight loss drug faces stiff competition in the United States. That's not necessarily being reflected in the share price, so we'll get the details next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Welcome back. This is the opening trade. It is 8:19 here in London, and the European equity market picture looks a little more negative perhaps than anticipated. US futures still point higher, in fact, increasingly so, but European futures weighed down by a host of, well, some earnings reports, but then again, some earnings reports have sent us higher. It's a mixed bag, it seems, from the companies that have reported this morning, Guy.
And some of the outcomes are a little confusing. I love it when we kind of put a narrative on a story and try and assume that that narrative is the right one. Why is Novo up this morning? 2.86%. Shares a little higher. The Danish drug maker trimming its forecast. The market expected it would trim its forecast. Blockbuster obesity and diabetes drugs struggling with competition in the United States. That doesn't sound particularly positive to me, so why is the stock up by 3%? There is one person to ask in this kind of a scenario. He always has a great narrative. Sam Fazeli, Senior Pharmaceutical Analyst at Bloomberg Intelligence, joining us around the table. Good morning.
Good morning.
Why is the stock up?
Yeah, so I think everyone expected this. One of our clients was
the stock to be up?
No, that there will be a downgrade.
Right.
And that they'll miss. Wegovy missed by 9%. Yeah. And apparently there were like 18 preview notes from sell side, all pointing to a possible downgrade. And you can see it on the Bloomberg terminal. We have data, excuse me, for prescriptions. You can see that Wegovy prescriptions are flat. Yep. Zepbound prescriptions are going in a nice straight line upwards. So that was part of it. Then, of course, they had some inventory issues, etc., in the first quarter. But they need to get the initiative back in terms of getting Wegovy to be more prescribed in the US.
Okay. Yeah, they're talking a lot about, well, that they're saying this thing's happening in the US, compounders taking a third of the market. Yeah. Now, I was reading about this, Sam, and it said that the FDA allows the compounders to copy these drugs in a time of shortage. Yeah. But now they're not in a shortage. So does that mean that things get better from here for this company?
Yes, yeah. Yes, Anna. They're supposed to. And I just want to remind everybody that Lilly didn't miss. The reason Lilly's share price was down was because they didn't upgrade. So which is a very funny thing, because today we have a downgrade and the share price is up.
Yeah.
But the reality is that, what Novo has to watch out is that they can't tell a totally different story to what Lilly says. Compounders have been an issue, but that door has been closed, although there's some of them still going. And interestingly, Novo's just done a deal with one of the ones that was the most vocal, which was Hims. If you remember, they announced that last week. And price pressure is what I'm worried about for both of them. On the other hand, we've always been saying the volume is going to be so high that the lower the price, the more volume. Yeah. Let's see that happen.
Well, speaking of lowering the prices, feels like Novo has a few more hurdles than perhaps Lilly does in the regards that, one, if pharmaceutical tariffs come down the pike, that could affect things. But also, Novo had I think, recently partnered with CVS in terms of accessibility and coverage as well, which was surprising given that there was potentially this cost pressure coming down the pike. Can you just put those into context for us?
Yes, so one of the directions that the price was going is as a result of that deal with CVS. The price that they've given CVS is usually like this, and that wasn't a surprise. Any new drug launch, when there's 2 or 3 competitors, they tend to try and win formularies, so they're the only ones on that pharmacy shelf, and their best move is to do something with pricing, and that's what Novo's done. So this is part of that pricing game that I've just been referring to.
Let's stay in the United States. The next director for the Center for Biologics and Research is going to be Vinay Prasad. Who is this person, and why is he having such a big effect on stock prices of vaccine makers in the United States?
So Vinay is a hematologist, well respected in his field. And we have been following him with regards to all his thoughts on myeloma, particularly, which is an area that I specifically look at. And one of the things I think is that he's very vocal. and has been a very vocal opponent of some moves that the FDA has made. For instance, previously they'd accepted a biomarker for myeloma drugs to be approved, and he was an opponent of that. But also he's been a very vocal opponent of broad vaccinations during the COVID period, specifically children, for example. So I think people are thinking this is yet another layer of pressure on the pharmaceutical industry when it comes to getting drugs approved, getting vaccines used particularly, so that mandate might get narrower and narrower and narrower.
Tell us your early impression then, Sam, of the US administration and where it's going to be, where we're going to see consistency of approach towards the pharma sector and where we're going to see change, because clearly vaccination is one of the areas that get us a lot of news flow, and we're seeing that having an impact today. But there's been talk about improving the nation's diet, for example, and that sort of thing adds a different complexion. So what are your first impressions?
A lot of the things I hear I really like. Removing food additives, trying to manage any extra additives that are going in food, trying to move to natural foods more and more. That's great. How that actually gets implemented, that's a big challenge for the administration and etc. So, whereas for the pharmaceutical industry, I think the biggest question is, aside from vaccines, where there's a general, it's not just in the US, here we have a massive measles outbreak. It's the same reason, vaccine hesitancy amongst people. It's pricing, it's drug pricing, and whether there's going to be a tariff, how is that going to be implemented, who does it hurt?
All right, Sam Fazeli, Senior Pharmaceutical Analyst at Bloomberg Intelligence, walking us through everything in the sector. We thank you so much. Guy.
I want to stay in Denmark, but I want to talk about Maersk. So we're going to move on from Nova. Let's talk about Maersk. The stock is down really quite sharply this morning. In fact, shippers are broadly down really quite sharply. The reason for this appears to be that a deal has been done with the Houthis. There is virtually no detail about the deal that has been done with the Houthis and the United States. And if you read Middle Eastern newspapers, they're talking about the fact that this has been done in advance of Trump's visit to the region because he didn't want to have this campaign ongoing while he was there, because that would have caused problems for the Saudis, etc. So I don't know how this lasts. The details are scant. But as you pointed out earlier, and I got the wrong way around, shippers are down because shipping rates are likely to fall. If you can re-access the Red Sea, that's going to mean you don't have to go around the Cape. That means that actually the capacity is going to come back into the market. That means the shipping rates are going to go lower. So in some ways it's a logical response, but there is a lack of detail this morning.
There is, and you just wonder if some of these moves, therefore, pretty premature. BMW, the auto sector, also in focus.
Absolutely. They're actually making comments on this tariff story, which is really interesting. They said a limited impact on their first quarter earnings. When you look at their second quarter earnings, they are having a fairly measured response as well. This is a complete sea change from a global automaker, because they actually said they're expecting a reduction by July. Those shares higher by 3.9%.
Let's talk about the defence sector within Europe, because Hensoldt spoke to our colleagues on Bloomberg TV earlier on this morning. This is the German defence business. They raised their long-term guidance to reflect increased European defence spending. The stock is up by 6.4% right now. It even had a volatility interruption earlier. Such was the enthusiasm. So we continue, of course, to watch developments around the defence sector. Coming up on the programme, the US and China announced trade talks in Switzerland this week, while Canada tries to calm tensions with its southern neighbour. We will discuss all the latest trade headlines with the former chief of staff at the US President's Council of Economic Advisers. This is Bloomberg.
Africa has been silent in telling those global stories. And that's where we have a mind full of stories that we can mine and mine and mine for years to come. And I think investors realize that, and they understand that there's real potential. And as I said earlier, independent films are making a huge comeback. So you're looking at your $5 million movies, your $6 million movies, and this film fund that we're setting up is looking at films, we're looking at financing films between a budget of $2 million to $8 million. So we truly believe that we will get a return on investment, and it's about managing expectations. We're not saying to investors we're going to go out there and we're going to sort of start making films that are going to bring you $1 billion return on investment. That's not to say there can't be outliers. The world has seen this happen time and time again.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is the opening trade, about 30 minutes into today's session, starting to see the micro seep up to the macro. When we're looking at some of these individual movements, we're looking at Euro Stoxx 50, that's down about 1/10%. A Stock 600, that's down about 0.3%. Underperformance when it comes to the French index there. So that's interesting, given that we are seeing some individual movers in the likes of shipping, in the likes of automaking as well, that haven't really shown up in the broader indexes. So that is going to be something that we keep an eye on.
Let's talk about what is happening in terms of this trade narrative and the picture that we are watching so carefully at the moment, because it does seem as if this is going to be the kind of the story that we build up to throughout the week. I can't believe that I'm talking about this on a day when the Fed is kind of it's Fed day.
I think we've got time in around 20 minutes to talk about that.
We'll talk about the Fed,
yes,
which is in some ways amazing, Chrissy, that is kind of where we are right now. But it seems as if the trade story, this weekend's talks, that's now the number one theme.
Absolutely. I think we've got the perfect guest to talk about it there. Let's go to those high-level trade talks happening in Switzerland later this week, led by the U.S. Treasury Secretary and Chinese Vice Premier. Harry Brodman, former Chief of Staff at the President's Council of Economic Advisors, joined the program. We should mention he was also a former U.S. Assistant Trade Representative who led negotiations to establish both the WTO and NAFTA. Harry, pleasure to have you on the program. It's a fascinating resume to have, of course. Walk us through kind of your initial take on this trade or potential trade talk happening in Switzerland between the United States and China after a little bit of, I want to say, silence from both sides in terms of coming to some sort of agreement.
I think silence is an understatement. And I think the fact that this is happening neither in Beijing or Washington or in somewhere else is sort of interesting. It may indicate that both sides are still posturing before they get into any kind of substantive conversation. That's my take.
When it comes to that substantive conversation, though, where does it even begin? What do you think is the number one issue, given that there's questions around intellectual property, there's questions around tech, there's questions around tariffs, not to mention the political support for, well, now India, Pakistan, the support between Russia, Ukraine, and other kind of hot spots around the world. Where do those conversations in Switzerland begin?
I think you're quite right to put it in that broad context, because the agenda is quite full there. And these other issues that you just mentioned are preoccupying people. So I think it's up to the U.S., frankly, rather than China, to try to dive deep into what can the U.S. do to satisfy Mr. Trump and his friends about reducing, the trade war between China and the U.S. I don't know if you saw the Treasury Secretary yesterday testifying before the Hill on questions like this. It was quite a stunning display of sort of inability to read a room politically, let alone sort of making any substantive context about what's going on. So the Chinese, I know them quite well. I've worked there for years. They're not stupid, and I think they're going to wonder what is going on in this meeting. That's my guess. Of course, we'll see ex post whether or not my hypothesis is correct or not.
Harry, what do you think the Chinese want from the meeting? How are they approaching it? Give us a sense of what you think they're going to be looking at as they approach this process.
Well, as many people know, the Chinese take a very long view of things, and I think that's the view that they're going to take and are taking with respect to Washington. I also think they have a pretty good read on Mr. Trump from his first term, and they know that he can be quite erratic. My guess is they're going to let him talk and let the team, his side, talk most, and then they are going to react. I would be surprised if they begin by putting any proposal on the table. I think they really want to hear once and for all what really is behind Mr. Trump's moves, because yesterday, in the conversation that Mr. Trump had with Mr. Carney, it was quite interesting that he didn't even mention tariffs or any kind of trade discussions whatsoever. I'm sure the Chinese saw that, the press readout of that, and I'm sure they're sort of scratching their head. What is going to take place in Switzerland?
Yep. So set expectations for me. Financial markets are going to be on tenterhooks. We are going to build up to this process throughout the week. As we were mentioning earlier, it's Fed Day. We're barely talking about it. We have a really interesting development. We don't know quite how to read it. What do you think expectations should be? What is a win here? What should generate a positive market reaction, and what do you think should generate a negative market reaction?
Well, on the win side, and let's go to the tail of the distribution, a real win would be sort of a simmering or a cessation of trade hostilities between the two. That the prospects of that are less than negative, if I can say. I think the real outcome is going to be, let's have further talks. That is likely to be the outcome of these kinds of sessions. It would be striking, given how I know China, that there's going to be a resolution, any kind of meaningful resolution by this first engagement. This is more of a table-setting discussion, is my sense.
Harry, good morning. We heard from President Trump yesterday. He was talking about how he thinks he's going to set the terms. He says he'll set the terms for these trade deals. I wonder whether that will play out okay for certain partners, for certain trade conversations, but I wonder how that goes down with China.
It will not go down well with China, and I think, it's striking that he's being so assertive on this, because, as I say, the most recent meeting with the head of state yesterday with Carney was he did not seem interested at all, Mr. Trump, in trade at all. I mean, he really did not dive deep substantively, and I'm not sure that his deputies in this meeting have a leash that allows them to dive deep. So I think if there's no resolution, if sort of going on as usual, that's probably the most likely outcome. There may be some kind of titular, fig leaf put on the conversations, but I don't think that there are going to be any substantive outcomes coming from this.
Harry, outside the United States, we've seen the UK and India agree to a trade deal over the past 48 hours, and not to go to all of the detail of that, which might be outside of your area of interest. But I wonder how you react to the idea that we're seeing other parts of the world do trade deals, ones that have been unavailable, it seems, for a very long time. And I wonder if the presence of President Trump and the tension that he is providing to global trade, whether that is driving others to find common ground.
Absolutely, and I think the UK-India deal is an important one. I do think he's going to wonder, well, how come other countries are being able to engage in trade negotiations and I'm not? That's going to be sort of from a personal perspective. He's going to mention this, and then he's probably going to poo-poo whatever deal was put in place by any other country without him at the table. That's my guess. Now, there's very little that's going to motivate him to make a deal, if you will, at this point. He said yesterday when this meeting with Carney, he says, we don't even need any trade. And he wasn't referring just to Canada. He was talking generally. It was a striking conversation. I don't know if your viewers, have seen the readouts or the tapes of these conversations. It was quite striking.
Harry, speaking of these striking conversations, I'm curious, as Guy kind of pointed out, the markets are bracing for any impact that we hear from the Swiss meetings, any kind of repercussions we hear, or any sort of dialogue we hear from the EU, from the UK. What is the pain point? As we sit here in London, you're joining us from DC, what is the pain point that the rest of the world can hit when it comes to the United States? So far, we're only talking about goods. Should we be talking about services, financial markets, treasuries? What is the #1 pain point the rest of the world can touch?
Well, I think the #1 pain point is just to reduce the temperature of what's going on in trade policy on the part of the U.S. I think that's really the pain point. They want to look for progress somewhere. I don't think, they're not even going to be pressing for a double click on that. If there was just some kind of, lowering the temperature and Trump or his deputy saying, we had a really good conversation, we're going to meet again, there's momentum here. That's what I would draw as sort of the best outcome of this meeting, which would calm emotions in global markets. I don't know whether it will calm emotions here in Washington, at least in the White House, but that would be really helpful because the atmospherics now are really quite problematic. I've never seen this kinds of emotions, impacting trade conversations at such a high level at the heads of state. It's as I say, it's quite striking. So I think everyone's on tenterhooks just to see some kind of momentum, even if it's marginal.
Harry, yesterday, Paul Tudor-Jones described what we are seeing in terms of the tariff story as the biggest tax hike the United States economy has witnessed since the 1960s. Is that the right way of thinking about it?
I think in part, but I think it's really important to sort of, unbundle a domestic tax issue from international relations and the taxes, essentially the analog on trade. Because listen, the world, the U.S. is the #1 economy in the world, and the fact that it's floundering from a policy perspective, I think is really quite troubling emotionally for traders, for investors, for workers, for consumers. At least it is here in the United States, and I suspect it is in other economies around the world. So people are just looking for the temperature to drop down, but I think more importantly, to have the President of the United States act rationally about what does he want and what does it take to move from A to B.
Harry, thank you so much. Thanks for your time. Harry Broadman, former Chief of Staff at the President's Council of Economic Advisors. We thank you for joining us on the programme. Coming up here on this programme, we will have the latest developments after India launched military strikes against Pakistan in response to an attack in Kashmir last month. More on that. This is Bloomberg.
Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer. You know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to the opening trade. We're 44 minutes into our European trading session and seeing some weakness across European equity markets. US futures, though, point higher, focused on trade themes. Let us turn to some geopolitical news coming to us from Asia. India says it has struck 9 targets in military strikes against Pakistan. The tit-for-tat blows come after a militant attack that killed 26 people in Kashmir last month. India says it only hit what it called known terror camps.
These actions were measured, non-escalatory, proportionate, and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India.
Pakistan says the strikes killed 26 civilians, adding that it shot down 5 Indian jets in retaliation. Its defense minister explained his country's actions.
This has been initiated by India. If India is ready to back down, they have taken the initiative. We have just responded. We have been saying all along in the last fortnight that we'll never initiate anything hostile towards India. But if we are attacked, we'll respond. If India backs down, we will definitely wrap up these things, But as long we are under attack, under fire, we have to respond. We have to defend ourselves.
Bloomberg's Pakistan bureau chief Fatih Mungi joins us now. Fatih, take us through the latest developments here. What has been happening in the last few hours?
Yes, thank you for having me. So basically in the past few hours, what we've seen is that both sides, Pakistan and Indian officials, have given some details on what happened during the middle of the night. And as you saw, as you played the Indian Foreign Secretary clip, he basically says that they've targeted multiple areas in Pakistan. They haven't hit any civilians, but Pakistan says otherwise. They also did not talk about Pakistan claiming that they have shot down 5 Indian planes. So there is no address to that. But the latest what we understand is from both sides is that this is not over yet. I think that is the main thing to get. Pakistan has said that it will strike back. It will strike back at its own choosing of time and day. So the retaliation is there, and the Indian official also mentioned that they have intelligence that there will be some strike at some point in time. So that is what everyone is watching out for now.
Fussy, you mentioned that the conflict is not indeed over. What does a further escalation look like? Is there clarity on that?
Well, I think that is the million-dollar question right now. We have seen in the past that there has been a tit for tat. So basically, one side does a strike, and the other side does a similar strike, and it ends over there. If Pakistan strikes and it ends over there, which we have seen historically in a few cases with Pakistan, then we can see that it ends over there. But if it doesn't end over there and India decides to respond again, then we are heading in a tricky situation.
Bloomberg's Pakistan Bureau Chief Fussy Mungi joining the program this morning, giving us the context from Karachi. We thank you so much, guys.
Let's turn our attention to one of the other pieces of political news that we got yesterday, this time centred around what was going on in Berlin. Germany's new Chancellor making his first trip abroad today after surviving what could only be described as an embarrassing stumble in his effort to take power yesterday. Friedrich Merz initially failed to win enough votes in Parliament, in the Bundestag yesterday, to take office.
Today, I have the honor of assuming the office of Federal Chancellor in this House. First of all, I am grateful for the support of the voters and also for the trust of the members of the German Bundestag that I have received today. In the second round of voting, I am very aware of the responsibility that this office entails. I accept this responsibility with humility, but also with determination and confidence, ladies and gentlemen.
Und mit Zuversicht an.
Let's talk to Ollie Crook about what has happened, what will happen, and kind of how we should think about this in the context of the wider European story. Ollie, Merz is now Chancellor. It was a messy start. How does that in any way impact what he does from here? Is he weakened from the get-go?
I think he absolutely is, Guy, and I think that it's fair to call it, a fairly inauspicious start. I mean, in the very first few hours of basically what should have been a rubber stamp transition, basically Friedrich Merz failed where no other chancellor had failed in the sort of modern era of German politics by not garnering the support of all of the lawmakers, or even enough of the lawmakers of his coalition. They obviously went back and they managed to vote again. He was sworn in as chancellor, but I think precisely to your point, Guy, it highlights the fragility that still exists under this sort of coalition government, and we should say, Guy, the whole ambition here was to bring out of existence a very unstable three-way coalition government, which fell prematurely because of all the deadlock and disagreements that there were, into an age of political stability in Germany, and that really did not happen in the first few hours. In the sort of, for Friedrich Merz, after he did get sworn in, he did give us a flavor of kind of how he wants to govern, how he wants to run his government. I'll quote from what he said yesterday. He says, "I just want to govern without pomp and without superfluous she. I say to the colleagues who joined this federal government with me today, who were sworn in today, we must deliver now." So you'll be pleased to hear a she-free government there in Berlin. But the really point that he's trying to make here is that they are going to govern with sobriety, with competence and velocity, something that has basically failed to materialize over the last few years with the last government, and something that the AfD has been exploiting to sort of great fanfare, saying that basically mainstream parties with all these coalitions cannot get anything done in Germany.
Okay, excellent. Nice use of language. Now, Merz is meeting Macron and he's meeting Tusk today, so hitting the ground running, I'm sure, will be the narrative. What's going to be on their agenda?
Yeah, so listen, for all the domestic issues that exist within Germany, and we won't have to enumerate all of them, we've been talking about them for several years now on Bloomberg Television, on this program and others. The other issue that there has been for Germany is it has not really had a global presence. It did not really have as global a presence under Olaf Scholz. He was not somebody who really liked the limelight, didn't really want to assert Germany sort of on the global stage. There is an opportunity here for Friedrich Merz to change that in a world in which Europe will have to assert itself more. So we sort of look at where he's decided to go in his first few days. It tells you something about the messages he wants to send. He goes to Paris today to meet with Emmanuel Macron. A reset in that relationship is certainly necessary. There was a sort of tension between Macron and Olaf Scholz for the years that they were governing together. He then goes to Warsaw to meet Donald Tusk, an absolutely key ally on a number of issues, but specifically defense. And then he goes directly to Brussels on Friday, where he'll meet Ursula von der Leyen. He'll meet Mark Rutte, the Secretary General of NATO, to discuss defense. And then next week, and this is sort of a key meeting, the EPC meeting, you'll remember that Keir Starmer hosted one of these right after he was elected in the United Kingdom, and it gave him the opportunity. This is the largest sort of European level, leader level format that exists across Europe. So it really gives Friedrich Merz an opportunity to meet with all of these leaders in person and begin to establish these relationships in a world where basically the multilateral order is no longer governed by the United States. Who is going to step up? It's going to be countries like Germany and like France, if they can do so. And we should say, just as a final point, this is a different CDU than Angela Merkel. This is a more right-wing to you, but Friedrich Merz is somebody who is deeply committed to the European project and knows the importance of a united Europe dealing with the problems that they're facing from China industrial policy to U.S. foreign policy.
Oliver, thank you very much. Bloomberg's Oliver Crook there. And Chrissy, I know we were both thinking about this yesterday. It seems that Macron and Merz both agree on the need for a European media platform in the face of US tariffs on that particular industry. So there we go, something that they might find it easy to agree on.
I loved Lionel Laurent's kind of piece on this in opinion. He said that Macron wants a Netflix in Paris, not just Emily.
Not just Emily.
And as a key follower of that program, I should say.
Now he's got Merz in Paris.
Well, he also has to deal with Emily in Rome, which is happening. It's a whole other conversation. Let's talk about the other things we're keeping an eye on, of course. The Papal Conclave begins. If you haven't watched the movie, by the way, I highly recommend. It was fabulous. And speaking of the film industry as well, remember those Hollywood tariffs, or at least the conversations with Trump, very much something that might show up in Disney's earnings, at least commentary around that. We're expecting that after the bell today as well, alongside Uber. But then plenty of data in the U.S. from MBA mortgage applications, but ultimately the Fed rate decision and comments from Bessent in Congress. Plenty to digest. Let's see what's on the top of Val's mind. Val.
Hey, we got the Fed decision later. It might be maybe the most boring Fed decision this year.
Don't say that. No, Val, this whole show has been building towards you telling us about the Fed.
You're jinxing it.
But there is no forecast or dot plot at this meeting. The nuance is going to be in the press conference. How does Powell talk about the threshold for the next rate cut from the Federal Reserve? What does he need to see in order to telegraph that the next rate cut might be coming? I think that the current market conclusion is that we need to see weakness in the labor market. We need to see the unemployment rate ticking up before Powell starts talking adamantly about the next rate cut. Because frankly, of recently, he's just been focused on the rise in inflation expectations, the worry that there will be some tariff-induced inflation that will prevent the Fed from cutting immediately, maybe as quickly as the market would want them to.
The thing about it sounds really simple. The Fed's going to cut 3 times this year. Kind of that's the market. Kind of we're going to cut 3 times this year.
Well, the dot plot says 2. So.
Okay, so the dot plot says 2. The problem is that at the moment the kind of the left and the right tails are really big. They're either going to cut hardly at all, or they're going to cut loads. We've just got the kind of we're kind of in the middle, which is a kind of weighted average of both of those two things. How real? Is 2 real, or is none real, or is 5 real? That's the bit that I can't get my head around at the moment, and it feels more extreme than it normally does by quite some considerable margin.
I mean, central bank speak would answer that question by saying uncertainty is high and we don't know and we're on pause until we see further clarity. So I think we're kind of at risk of having a copy-paste kind of answer, from Powell's previous press conferences to questions asked like that. You know, he'll talk about the risk on the horizon. I think one thing that could be interesting is the way that he talks about the first quarter GDP print, which did come in negative. On the hawkish side, he could totally brush it off by saying economic fundamentals are still strong. That was totally distorted by trade data. But on the dovish side, he could maybe paint a more negative picture by saying something like the front running of economic activity in the first quarter could lead to weaker economic activity in later quarters. We kind of seen that said by companies in earnings reports. They did see front running of tariffs, but they expect that to drop off steeply in the quarters to come.
It will be about the narrative he chooses to spin then. Valerie, thank you very much. Valerie Teitel with us to preview, of course, the Fed decision. We'll have more earnings interviews coming up in the Pulse. We'll be speaking with the CFO of Novo Nordisk and the CEO of the French utilities company Veolia. Both of those businesses out with statements this morning. That is it for the opening trade. The Pulse is up next. This is Bloomberg.
world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Is this a negotiation or the new rules of the game? It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Tensions escalate as India carries out retaliatory military strikes deep into Pakistani territory. Pakistan describes it as an act of war. Confirmation of the first trade talks between the U.S. and China and Switzerland this week lift optimism on Wall Street. Plus, the show must go on. Friedrich Merz begins his first foreign trip as German Chancellor after suffering a humiliating defeat in the Bundestag. Now, first thing is first, we also have FOMC, so there's a lot going on. There's a little bit of a risky attitude out there. Now, if you look at U.S. equity futures, actually, they're rising, dollar snapping, 3 days of declines. Again, the planned negotiations or the planned trade negotiations between China and the U.S. seem to be spurring a little bit of optimism that tensions between the world's 2 largest countries are actually easing. S&P futures getting some 0.6%. Look at Bitcoin. Always good to look at Bitcoin just below that 97,000 mark. The 10-year 43257, and then we'll also look at Brent crude 63.15. Let's also get to the European markets map. Again, quite a lot of earnings. So we have 2 chief executives on the show, and it really depends on how reliant you are on global trade, whether you have guidance that will support or disappoint investors. Now, the picture compared to the S&P futures is a little bit different because France, the Spain, but also the UK down some 0.4%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. India has conducted military strikes deep inside Pakistani territory, hitting what it describes as terrorist camps. It says the strikes were in retaliation for a militant attack in Karachi last month, in which 26 people were killed, but Pakistan has described it as an act of war.
This has been initiated by India. If India is ready to back down, they have taken the initiative. We have just responded. We have been saying all along in last fortnight that we'll never initiate anything hostile towards India. But if we are attacked, we'll respond. If India backs down, we will definitely wrap up these things, But as long we are under attack, under fire, we have to respond. We have to defend ourselves.
These actions were measured, non-escalatory, proportionate, and responsible. They focused on dismantling the terrorist infrastructure and disabling terrorists likely to be sent across to India.
Well, Bloomberg's Pakistan Bureau Chief, Fuzzy Mangi, joins us now. Fuzzy, thank you for joining us. What has been the major developments in the last couple of hours?
Thank you, Francine. So what we've seen in the past few hours, you played a clip of the Indian official as well. Both sides, Pakistan's military spokesman and the Indian Foreign Secretary have come out and they have given some details about what happened during the night. And India has said that they have hit, terror outfit infrastructure. Pakistan denies that and says that 26 civilians have been killed. India doesn't comment on what Pakistan said was that they have shot down 5 fighter jets, 5 planes, including 1 Rafale. And India didn't talk about that in their press conference or briefing. Right now, there are 2 very important meetings going on. Prime Minister Narendra Modi in India and Prime Minister Shehbaz Sharif in Pakistan are both chairing what we would say is, cabinet security meetings. And possibly, we are expecting for some statements to come out. Prime Minister Sharif is expected to give us a speech to the nation and address to the nation once that is that meeting is over.
Yeah. Fuzzy, will the conflict escalate further?
The other big sum up from the two press conferences or briefings was that both sides expect something to happen. Pakistan has said that it has the right to respond to the attack, and they will do so at their own time and date. The Indian Foreign Secretary also said the same thing, that they have intelligence of Pakistan planning an attack. So one thing is clear, that what's been done is not over yet, and we're going to see something else happen as well. And yes, that's the latest.
Fuzzy, thanks so much. Fuzzy Mangi there with the very latest on what we're following very closely. Now, China and the U.S. have announced high-level trade talks which will happen in Switzerland later this week, led by the Chinese Vice Premier and the U.S. Treasury Secretary Scott Bessent. He's been calling the current tariffs unsustainable. Meanwhile, President Donald Trump says he would set tariff levels for trading partners.
We're going to sit down and we're going to put very fair numbers down, and we're going to say, here's what this country, what we want, and congratulations, we have a deal. And they'll either say, great, and they'll start shopping, or they'll say, not good, we're not going to do it. I said, that's okay, you don't have to shop.
Now, for more, let's bring in Roz Matheson, Bloomberg's EMEA News Director. So, Roz, talk to us, good morning, first of all, but talk to us about how important these trade talks are, and are both sides softening?
Well, it's interesting to see that a conversation is actually happening. Just the fact they're going to meet is significant. And at that level of, the U.S. Treasury Secretary Scott Bessent, China Vice President He is going to be there. So this is a high-level conversation, and they're agreeing to meet in person. The expectations for anything tangible will be very, very low. This is not about getting a trade deal, as Scott Bessent said. This is about de-escalation. And so it's a kind of feeling out exercise to have these talks. They'll work out where their parameters are a bit. We're not expecting a massive announcement of a trade deal to come from it, or understandings around tariffs, but just getting in the room is a start. And you can see that that's why you get some relief in financial markets today as a result. So this is not about, again, a big announcement, but it's a bit by bit. So this is the first step. After this, at some point, do we get a phone call directly between the presidents of the US and China? Is that where some of this clarity really starts to come in? It was interesting also to see today China coming up with a raft of policy announcements on rates, dropping a bunch of rates, but also looking to push liquidity into the financial markets. And that's to show again that China is working to fortify its economy and to support its markets, and it has the ability to do so. And that's a bit of a signal also to the US going into these talks. So even though they want to have the conversation, that China is not going to move away from taking quite a hard line.
What about Rob's negotiations with other countries?
Well, it's interesting to see. Obviously, we had Donald Trump's comments overnight saying basically, we'll set some numbers for you and present them to you. And is that the extent of a negotiation? But we do know from our own reporting that US officials and UK officials are locked in very, very intense conversations to try and get towards some sort of framework understanding. That's for the UK to seek relief, obviously from tariffs on autos, on steel, and also the UK is very worried, obviously, about pharmaceutical and now about the film industry in the UK as well. And so we know that there are conversations happening as we speak between those officials to try and get towards some sort of framework understanding. We also know, of course, that the new Canadian Prime Minister, Mark Carney, met yesterday with Donald Trump to have that kind of, again, setting of parameters, frameworks, understandings, conversations. I mean, there was no tangibles from that. Donald Trump didn't give ground on tariffs to Canada, but it's how are we going to have these conversations going forward? What are the boundaries going to be, and what are the red lines for each of that? So it's interesting to see that process happening across the board, be it Canada, China, or elsewhere.
Roz, thank you so much. Bloomberg's EMEA News Director, Roz Matheson. Now, Novo Nordisk, one of the big gainers in Europe this morning, despite trimming its forecast. That's as sales of the Danish pharmaceutical giant's blockbuster obesity and diabetes medicine struggle with competition from the U.S. Well, I'm delighted now to be joined by Karsten Munker-Knudsen, the Chief Financial Officer of Novo Nordisk. Thank you so much, as always, sir, for joining us. So what portion of your sales do you think will be affected by Donald Trump's tariffs to branded pharmaceuticals produced in the EU, and how long will it take for you to reshuffle your manufacturing?
Well, so first of all, at this point in time, then we don't know exactly how potential tariffs are going to play out. We have a significant footprint in the U.S. already, so in totality, we have more than 10,000 employees in the U.S. spread between manufacturing, R&D, and commercial. So let's see how it works out. But I would say out of total volumes, as a matter of fact, we're actually exporting more out of the U.S. than we're importing. And as a case in point, then the product we just submitted here in the first quarter called Oral Sema Obesity, which we submitted to the FDA for potential launch in the U.S. early next year, that is produced in the U.S. by American employees to be sold in the U.S. So a purely U.S. to U.S. supply chain. So let's see how it works out.
Sir, do you see actually rising demand for some of the contract manufacturing, for example, at your Catalent site in the U.S. from customers looking to bring more manufacturing to the U.S.?
Well, so Novo Nordisk as a company, we are not in the contract manufacturing business. We acquired 3 fill finish sites with the intention to use them, of course, adhering to the historic CMO agreements. So we're not really having our ears to the ground on the CMO side. We are buying for some of our pipeline products, but our main principle is to produce for our own needs.
Okay, will you seek more exclusive access, for example, deals like for Wegovy, like the one agreed with CVS last week? Are we going to see more of those kind of deals?
I would say our approach is really that we pursue open access in order for patients and prescribers to have free choice to choose the medication they believe serves their needs best. So we're not pursuing exclusive contracts, and of course recognize that it's a PBM choice, how they design their formularies, and then we're only happy that they decided to choose Wegovy for the CVS formulary based on the benefits of Wegovy. And then another part of the deal is that it actually provides access for Wegovy in the cash channel for patients to go to 9,000 CVS pharmacies to pick up Wegovy through a cash offering at $4.99.
What's the reason behind wholesaler destocking of Wegovy in the first quarter?
Well, I would say it's normal fluctuations where the wholesalers, they have certain algorithms, and the script numbers have been somewhat flattish in the first quarter, and I believe as a consequence, after coming out of a shortage around the turn of the year, then the algorithms are adjusting. So it's not a major change, to be honest.
Could I ask you how you see competition on prices actually affect market share in obesity this year?
Absolutely. So the key backdrop on obesity is that this is a market development strategy. So right now, if you take it in the US, then we're only looking at a few million patients being served by the industry in the US on branded pharmaceuticals for treatment of obesity, out of a total potential of 110 million. So this is a market built, and as a consequence, really not a price or market share competition at this point in time.
So how long will it take for competition from compounding pharmacies in the U.S. market to actually, for example, stop when the FDA restriction on compounded versions goes into effect?
Well, so the FDA decision, which was reaffirmed by the court not too long ago, basically says that bulk compounding has to cease by May 22nd. So after that date, bulk compounding, basically copies of Wegovy or Ozempic for that matter, are illegal in the US marketplace. And of course, we intend to work with the regulators to enforce that so that unsafe, unlawful compounding will cease at that point in time.
But is compounding affecting you more, for example, than some of your rivals such as Lilly, and why is that?
Yeah, that is our assessment. There are not a lot of really good market data on compounding due to the nature of the industry. But we believe that compounding is significantly more on semaglutide compared to competition. I think there are a number of factors going into the why on that. One aspect is that our competitor got off the shortest list 3 months before we did. So compounding had to cease earlier, and then also we were first to market in the incretin obesity market in the US. So on that front, compounders would also start looking at our molecule before they looked at competition.
Carsten Knudsen, thank you so much for joining us. That was, of course, the Chief Financial Officer of Novo Nordisk. Now, the French environmental services company Veolia has agreed to buy the rest of Water Technologies and Solutions for $1.75 billion as part of a drive to expand in the U.S. Now, Veolia is seeking to boost its U.S. exposure as President Trump looks to shore up domestic industries. The company has also reported an increase in first-quarter sales and profit and confirmed all financial growth targets for the year. Well, joining us now for an exclusive conversation is Estelle Brachlianoff, the Chief Executive of Veolia. As always, thank you so much for joining us. Could I ask you what actually, when you look at tariffs and some of the things that you're trying to gain in terms of market share in the U.S., how different will Veolia look like in 2, 3, 4 years?
I think it was a nice introduction you just did, because as you can imagine, to be announcing very good results because our demand is very strong. We've announced a lot of new contracts as well this morning, and to invest in the US in the water tech. Now, Veolia stands out in many ways compared to the very uncertain world we live in. In the US and in the water tech, this was identified in the Green Up strategic plan as a priority because the demand is super high. What are we talking about here? We're talking about providing ultra-pure water to microelectronics, which is one of the reshoring consequence, because microelectronics needs ultra-pure water and water altogether, and we have a unique positioning here. Same goes with micropollutant treatments, such as PFAS, which is a market which is growing very fast, and we are uniquely positioned with our Beyond PFAS offer to treat it. So we're talking here innovation, macro trend, and great positioning.
Well, I mean, and again, I know you've been reporting from strength to strength, another quarter of growth. When you look at the main segments and geographies around that growth, will they be the ones driving you in the future as well?
Yes, we have a lot of potential for growth in our booster of activities, which are actually boosting our growth, including notably outside Europe, US, the Middle East, and Australia. And in the US, we aim at doubling our size by the end of the decade. And it's interesting to see that whatever happened in terms of tariff or in terms of which administration is in Washington, this goal still stands. And why is that so? Again, demand for environmental security Those two words are absolutely key for me. We provide security of supply for industries. We provide security in terms of health, and that's what drives our growth, whatever happens. Again, tariff, administration, legislation.
Do you see more competition from China?
Oh, there is a lot of competitors. I do feel that we are a leader of our industry by our innovation. We are the first patent depositor in Europe. Just to give you an example, in water tech, we have 11 R&D centers. So yes, there is a competition from companies across the globe, including Chinese one. But still, we'll still stand out, and we have quite a unique, again, positioning, not only in patent and everything, but in our ability to combine the different businesses we have, the waste, the water, and the energy. I mentioned the example of PFAS, which is a forever chemicals, which is very at the forefront of the Americans, worries about their daily life. We have a unique solution which helps us concentrate the pollution and then destroy it. And the destroying element goes with our hazardous waste business, where our, concentrating it goes with our water tech business. So combination makes us in a very unique position compared to any of our competitors, which are only in one segment. We are the only ones to be able to combine all those segments to offer unique offers to our customers. And that's why I've announced this morning a series of contracts for $700 million, notably a few in the US, precisely thanks to this combination.
Where do you see the main challenges for Veolia this year?
We all have challenges, but nothing which will prevent us from delivering our guidance and our results, which are growing quarter after quarter. Veolia is about resilience and growth. The challenge will be always to be as flexible and agile as we've been in the past. When something kind of slows down somewhere, we're moving to somewhere else, and being very international, 80% of the company being outside France, helps us to seize the opportunity and even at times to create opportunities and the demand for our service. So keep our agility would be probably my answer to your question.
Is that overall, when you look at, again, all of these, significant investments in the US, the trade war, everything that comes in between, do you think that your plan could change? I know it's very thoughtful and always longer term, but is there a lot more volatility? Are you looking, for example, for more acquisitions from where you are now?
So a few things. For me, a strategy, like the Green Up strategy plan, gives you the direction and the beacon, if you want. The way to get there always depends on the circumstances, as long as you keep the foundation and the priorities. We always identify priorities as US, again, Australia, Middle East, as well as the water tech activities and hazardous waste. I will keep those priorities. And of course, we are agile in seizing the opportunities as they arise, like the big investment we've announced this morning in water tech, and in particular in the US. Going forward, we keep the flexibility of being able to seize new opportunities. So we have the flexibility, the strong balance sheet, and the headroom needed to be able to go on delivering good results and creating value in the next few years. So we keep on moving and being agile.
Thank you so much. Of course, as ever, Estelle Brachlianoff there, the Veolia Chief Executive, for giving us a little bit of her precious time. Now, we'll have plenty more to come. We have a lot more, of course, markets. We'll look at FOMC. This is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. After a pause in March, a Bank of England rate cut is back on the cards at the next decision day. And markets will be listening to Governor Andrew Bailey for clues on the outlook as the UK grapples with the impact of President Trump's tariffs.
We all certainly know in a world of even greater uncertainty.
Tune into Bloomberg for live coverage of the BOE decision and press conference. It all starts Thursday at 12:30 p.m. on Bloomberg. Context changes everything.
Well, let's bring you some corporate news out of the U.S. And chip maker AMD says U.S. restrictions on sales to China will cost $1.5 billion in revenue this year. Now, that warning clouded an otherwise upbeat outlook for the company, which is NVIDIA's closest rival in AI processors. Well, AMD's chief executive reiterated her projection that new chips debuting soon will help boost sales in the second half of the year. Now, Rivian says full-year deliveries will decline more sharply than it anticipated a month ago, citing the impact of tariffs. Now, the automaker says President Trump's trade policy risks worsening an existing slowdown in EV demand. However, the company still expects to achieve a modest full-year gross profit. And the secretive process of electing a new leader of the Catholic Church begins today. Now, these are live pictures as more than 100 cardinals gather at the Vatican's Sistine Chapel for what's known as a papal conclave and would not emerge until a successor to the Pope Francis is chosen. Bloomberg's Alex Morgan has more on what to expect.
Choosing a new pope. It's a tradition stretching back more than 7 centuries, shrouded in secrecy and taking place locked away from the outside world. Here's how it works. When a pope dies in office or takes the far rarer step of resigning, his successor is chosen through a process known as the papal conclave. More than 100 cardinals are called to the Vatican, where they cast ballots for a successor in the Sistine Chapel. They're not allowed any contact with the outside world until they reach an agreement. And that's a process that can last anywhere from days to weeks to years. And this is where the famous black and white smoke comes in. The results of each ballot are counted aloud. If no candidate secures the necessary 2/3 majority, then the ballots are burned and a chemical added which turns the smoke black. When finally the cardinals are in agreement, a chemical is added which turns the smoke white. That's a signal to the assembled crowds that a new pope has been chosen. The Dean of the Sacred College of Cardinals then asks the winner if he accepts his election. If he does, he chooses a papal name before appearing on the balcony of the Basilica of St. Peter's to bless the crowds and the rest of the world.
Well, coming up, we'll dive into the markets with Grace Peters from JP Morgan Private Bank. That's next, and this is Bloomberg.
Right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is a $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on.
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg. Good morning, everyone, and welcome to the Pulse. I'm Francine Lacroix here in London, and these are your top stories. Now, tensions escalate as India carries out retaliatory military strikes deep into Pakistani territory. Pakistan describes it as an act of war. Confirmation of the first trade talks between the U.S. and China and Switzerland this week lift optimism on Wall Street. Plus, the show must go on. Friedrich Merz begins his first foreign trip as German chancellor after suffering a humiliating defeat in the Bundestag. So markets also welcoming the news that the U.S. and China are to begin trade talks at the same time. Beijing is ramping up efforts to help an economy caught in a second trade war with the U.S. Well, let's bring in our very own Valerie Teitel. So, Val, what's been the market reaction so far?
Quite jubilant to start the morning, Francine. S&P futures on those headlines rose above 1%. We are off those highs, but we're still in the green, up 0.6% for the S&P 500 futures. The dollar is also liking the story that the U.S. and China are going to be getting together to talk. We're 0.25% stronger on the Bloomberg Dollar Spot Index. There also was a bit more risk on in the Asia session, and that was due to the fact we got a surprise policy announcement from the PBOC. They did end up cutting the RRR by 50 basis points and also announced some other measures to inject liquidity into the market. Now, Francine, you can almost read this sometimes as maybe something bearish because perhaps the PBOC is really trying to bolster the Chinese economy because they expect this trade war to be maybe more drawn out than the market thinks. So keep an eye on any new policy announcements coming out of China. It has been quite supportive for now. But that's the central bank action in Asia. We do also have the central bank in the U.S. Announcing a policy decision later tonight. The Fed decision is at 7 p.m. Press conference at 7:30. It is going to be a lot about the nuance in this decision. The Fed is wildly expected to hold interest rates. The market is currently pricing in 3 cuts from the Federal Reserve for the remainder of this year. The first cut not fully priced into July. It's going to be down to the press conference on whether Powell leans dovish or hawkish and possibly changes what's priced in.
Thank you so much, as always, Valerie Teitel there with the very latest on, of course, what we're expecting from the Fed and some of the other market moves. Now, we're joined by Grace Peters, Global Head of Investment Strategy at JP Morgan Private Bank. Grace, thank you. Look, it's quite exciting, actually. For the first time, we have two sides talking, China, the U.S., and I don't know how the market is pricing it. So they're kind of a little bit optimistic, but they're not sure of the outcome.
Yes, I mean, the market would love a win when it comes to trade talks, and the big one is obviously with China. So, I think there is a degree of optimism towards that outcome already priced in. We're obviously looking at an S&P that's only 3 or 4% from the highs, but this undoubtedly, I think, would be good news. Our sense is that the current status quo with China, the tariff rates are prohibitively high. So negotiation is good. It's likely to come down to still high levels, but overall that will bring the US effective tax rate, we think, to more like mid-teens level, which is a situation where the US, where global GDP continue to grow, corporate earnings can continue to be strong, and therefore very much should be welcomed by the markets and risk assets more broadly. What I would just say is this is not just a US story. There are other things going on in the background. The big debate really is how much of the current US administration changes are going to be cyclical versus structural. And as part of that bigger debate, I think when we're thinking about which bits of the pullback and risk do we want to buy, geographic diversification is one of the key themes. So European equities as well as US equities, I think, should benefit from this view.
Grace, when you look at equities overall, is there going to be a lot of volatility? And so is your main kind of message, go forth, so don't be scared, but it will at some times kind of test your heart?
Yes, it's going to feel uncomfortable. I don't think you should be scared, nor should you be complacent. But I think investor positioning and investor sentiment is still pretty bearish. When we look at investor surveys across the market, the general mood is to still have that degree of caution, and that will be one of the elements, I think, that means that markets can keep moving higher. So we're in the process now of setting our price targets for next summer for over 12 months forward, and I think the S&P could easily reach the highs that it saw in February, if not progress a little bit further to make new highs over that time horizon, and positioning is part of that.
Is that with how many Fed cuts, or do you leave that to one side whilst you
No,
model
it's all in the mix. I don't think the Fed needs to cut this week. Today, the data is still pretty resilient when we think about the labour market. We expect 2 cuts this year, 2 more cuts next year. That takes you down to a terminal rate of about 3.5%. If growth is weaker, obviously they've got room to cut more. But I also think the Fed is a little bit constrained also by some of the inflation dynamics, particularly consumer inflation expectations. So the notion that growth is going to be positive, corporate earnings will be positive, the Fed will cut a bit, but not extensively so in the backdrop that we see, is where lands us to this notion of geographic diversification, still being pro-risk here, but in a intentionally diversified way.
What do I do with gold right now?
We still like it.
So you use it basically as a hedge, right? As the hedge par excellence.
It is. I think, look, there's a few different things we're trying to solve for. US overweight positions is one. So diversifying by geography and by currency is one of the elements. But also just broader geographic hedging, as you say. And there's definitely been a way over the last couple of years as to how gold is traded. And we think that those structural changes are likely to keep playing out. So we came into this year with a price target of gold of 3,500. We've just sort of broken through that now. So again, looking 12 months forward, north of 4,000, we think would be a new reasonable price target for gold, with key drivers being still emerging market central banks. When you look at EM positions versus DM central banks, there's quite a lot of room still for EM central banks to position closer to where the DM counterparts are, and also retail ETF buying, as well as in that backdrop, GDP being positive, demands for gold through tech and jewelry channels also being reasonably resilient.
And Grace, would you buy more gold if there's, for example, we're trying to follow India, Pakistan right now, you could see other geopolitical kind of hotspots around the world.
Yes.
Do you go to gold immediately, or does that have implication for treasuries?
No, I think that there's a few different levers that we can pull to think about, if we are going through structural change, which we think we could be in the early innings of that, and therefore the dollar overweights that have built up and the US equity overweights that have built up, that's where the intentional diversification comes in. Gold is one element of that. Volatility, Francine, to your comment before, yes, we think volatility is here to stay. So another element is trying to think which assets benefit from volatility being higher, and that would be derivatives and equity structured notes in particular. Hedge funds also in that camp. And then the other component is really the inflation piece, and this does tie into fixed income and the balance of whether you're looking for downside growth protection with your income, that would be fixed income, or whether you're looking for upside inflation protection with income, which would lean more infrastructure. And I think both of those pieces can be very complementary in this world that we see going forwards.
Grace, we're also like in the middle of the earnings season. I mean, I know it'll die down a little bit, but it's difficult to make sense. So you have certain sectors that have been doing okay, guidance, again, quite patchy, and that seems to be overriding everything.
Yeah, so I think, look, expectations are quite low coming into earnings season, in part because some of the GDP prints have come down, but also because everybody was just thinking, what are these statements going to be, and what can companies actually say at this point in time? And I think, on balance, corporates have offered a reasonably high degree of certainty around how they're rejigging their businesses and adapting to the environment that we see. So I think against low expectations, earnings season has delivered. The other thing that we think is interesting, post-earnings season is obviously share buybacks can start up again. And we do think that is quite a significant incremental buy in the market in the US, but also within the European large cap companies that, again, can just sort of help provide that floor to markets.
Great. How often do clients actually ask you about US exceptionalism?
A lot. A lot. It's a big conversation at the moment because it ties into that cyclical and structural conversation that obviously does have big implications for the portfolio. I think cyclically, we can say US growth is likely to dip because of higher tariffs, because of uncertainty, and we think US growth is still positive, but the delta between US growth and, say, European growth is likely to be smaller because at the same time, obviously, Europe has got its own, positive fiscal tailwind. The bigger question, and the time we're spending a lot of time with clients discussing, is what about the longer-term implications, whether that be for the economy, but also for portfolios, as I say, which have intentionally and unintentionally skewed overweight dollars, which, our long-term view is still that US growth, US earnings growth will be stronger than international counterparts. But, relative valuation still looks appealing elsewhere. And for clients, particularly that spend in euros or spend in sterling, i.e. not dollars, then I think that there's a little bit of mismatch perhaps that we're working through at times between assets and liabilities so that they can feel comfortable about their spending needs.
Grace, we also have Bank of England tomorrow. I mean, you could see exciting opportunities in the UK. How do you play that market?
Yes, I would say that our focus is more on Europe rather than the UK at the moment. I think that there are sectors in the UK that are interesting, particularly those linked to higher capex spending and some of the mining and the materials companies. But broadly, we're looking to Europe because there is, for the first time in a long time, a strong domestic story. That means you've got both a push and a pull when it comes to that region.
Okay, wonderful. As always, Grace, thank you so much for all of your insights. Grace Peters, Global Head of Investment Strategy at JP Morgan Private Bank. Now, Uber and Disney report today with a focus on how trade tensions could affect what are respectively the world's largest ride-sharing service and theme park operator. Well, Charlie Wells is here with an update. Charlie, good morning. So what's the outlook for Uber?
Good morning, Francine. So Uber is reporting in the context of quite a wild ride for its share price. You can see a significant dip late last year. Now, that was on concerns about robo-taxis, which I will get to in just a minute. But this year, you've seen a significant recovery upwards. Now, this is a movement you might not expect in the middle of a trade war, particularly with Uber so exposed on this auto front. But I want to bring in a little bit of a reason why from Mandeep Singh, an analyst at Bloomberg Intelligence. He talks about how tariffs could actually be good for Uber, in that if you get less new car ownership in the United States, that helps Uber lock in their supply advantage relative to its competitors. So that's a really interesting idea, potentially helping some of that share price movement upward as Uber reports later today. But we've also got to talk about this robo-taxi story. It's a shift where robo-taxis don't necessarily eat into Uber. These competitors don't necessarily hurt, but they actually help as Uber starts to develop partnerships, some that they have announced just in recent days with partners in the robo-taxi space across the globe. So we are expecting analysts to really focus in on how those partnerships have been going for Uber when they report later today.
Charlie, what are investors looking for at Disney?
Francine, Disney really has been under pressure in the market relative to its peers, especially Netflix and Comcast, the parent of NBC. Now, look, Disney is viewed by and large as more exposed on that trade front. They've got this diversified business. They've got experiences. They've got theme parks around the world, which are seen as more exposed given the fact that, these theme parks are across the globe. If we want to think about that experiences unit, that was responsible for 60% of profit last year at Disney. But in the event that we get heightened trade tensions, uncertainty, consumers pulling back, there's concern for that segment. So the number to look out for, $8.8 billion, that's the amount of revenue expected in the quarter that Disney will be reported on. A beat could help them, but a miss could really kind of feed into some of the negativity. We also have got to end on streaming. That is an important segment for Disney. They've kind of staked their future on that. We're expected to see growth, but slightly slower growth. So expect to see the company talk about this, about pricing power that they say they have, but investors razor focused on this unit.
Charlie, thanks so much. Charlie Wells there with the very latest on Uber and Disney. Coming up, the new German chancellor seeks to brush off the chaotic start to his leadership. We'll dig into the consequences of Friedrich Merz's humiliating first-round defeat in the Bundestag. That's next, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg. Friedrich Merz travels to Paris and Warsaw today on his first foreign trip as German chancellor, still reeling from a humiliating setback in his initial confirmation vote that raised early questions about his leadership. Well, Bloomberg's Ollie Crook joins us now from Berlin. So, Ollie, the Chancellor Merz is now chancellor, but it's been a pretty messy start.
Yeah, I could say it's a pretty inauspicious start for the new Chancellor of Germany, Friedrich Merz, who basically failed where basically no Chancellor in modern history has managed to fail, which is the first possible stumbling block, basically getting the number of lawmakers in your own coalition to vote for you on day one, which we assumed was going to be a sort of a rubber stamp, a procedural measure. That is not how it turned out. He was turned down the first time. They had to take the vote back, created quite a bit of chaos here in Germany on the first day. And again, this was supposed to be, Francine, the end of sort of political gridlock, political disruption within Germany from that three-party coalition under Olaf Scholz that collapsed before the end of its term because they just fundamentally couldn't agree on things. You had a little bit of flavor of that once again for the incoming Chancellor Friedrich Merz. He did manage to get over the line in the end, and that is something that is obviously positive. It is welcomed from the sort of political institutions here within Germany, but it does cause some real questions about how effective he's going to be going forward and how quickly he will be able to move. For his part, what he said after being sworn in is that he just wants to govern without pomp and without superfluous shishi. He said to his colleagues who are joining in the federal government with him today when he's being sworn in that they must deliver now. So, Francine, you'll be relieved to hear there will be no superfluous shishi from the German government. Really what Friedrich Merz is saying is he wants to bring sobriety, he wants to bring competence, and he wants to bring speed in order to enact his agenda, something that they basically will have to do while you've had the AfD for the last couple of months saying that basically all these coalition governments we've had over the last couple of years are not effective to get anything done. Friedrich Merz needs to prove that wrong.
Yeah, it's always reassuring when there's no shishi. So Chancellor Merz meeting with Macron and Tusk today. What will be on the agenda?
Yeah, his first trip is to Paris, maybe the land of the shishi, where he's going to meet President Macron. We have to say that there was a pretty strained relationship historically with Olaf Scholz and Emmanuel Macron. That is something that Friedrich Merz wants to change. It is really sort of symbolic that France is the first destination. As you know, Francine, it's very important for there to be a strong Franco-German relationship to basically get anything done at the EU level. He then goes to Warsaw to meet Donald Tusk, and then on Thursday, or on Friday, I should say, he goes to Brussels. He's going to meet with Ursula von der Leyen. He's going to meet with the NATO Secretary General Mark Rutte. And then next week is really his big opportunity to get in front of all of the European leaders within the broader European Committee. There is the European Political Community meeting on Friday in Albania and Tirana, where he will get to meet basically every single leader of Europe, which is absolutely crucial to start building those fundamental relationships. And we should say, Francine, this is really important. Despite all of the issues that Germany has domestically, Germany has really been kind of absent on the global stage. Olaf Scholz was not a sort of strong presence on the global stage. Friedrich Merz maybe can change that in a moment when there is this huge power vacuum left by the United States sort of abandoning the multilateral order. You really need to have countries like France and Germany that step up. And we should say, Francine, despite the fact that this is a much more conservative CDU, we should say that Friedrich Merz is a very big believer in the European project and very pro-Europe.
Ollie, thanks so much. Oliver Crook there in Berlin. Now, for more on this, we're joined by Judy Dempsey, Senior Fellow at Carnegie Europe. But thank you so much for joining us. I mean, it does seem that we eventually got there with Friedrich Merz, but how weakened is he on day one?
Memories may prove to be very short, but he certainly came away rather weak, lacking credibility, and a great fear that he didn't get his coalition right behind him from the very, very start. It's down to him, really, because he's not a very popular person inside the Christian Democratic Union Party, nor indeed is the leader of the Social Democrats, Lars Klingbeil, who will take over as finance minister and deputy chancellor. So both leaders now will really have to pull the ranks really tight around and ensure that this coalition gets off to a very quick and successful start. But Merz certainly has a bit of a liability, and now he has to really hit the ground running.
Yeah, how much is this a liability for Europe as a whole? Again, if he had a day one that's messy, France is also maybe not the most stable partner right now. So what does it mean in terms of negotiations with the US, with Russia and others?
Merz's key challenge is to give Germany back its strong voice inside the European Union. And this was lacking under Olaf Scholz, the former Social Democrat Chancellor, and indeed it was lacking under Angela Merkel as well. So Merz really has a terrific chance and an opportunity to really push a German and a European agenda inside the whole of the EU. And as your colleague said, it requires really working very closely with Paris, but also Poland, but also the Netherlands, Spain. This is about making Europe stronger, but also with a big push by Germany. So in terms of stability, this is Merz's big goal, of course, to project stability inside Germany and also stability inside the European Union, because actually a strong Germany is absolutely needed given what's happening over the other side of the Atlantic.
Yeah, and I guess this is about trade, this is also about Ukraine, this is about negotiating with China. What should Europe's priority and Germany's priority be right now?
Well, Germany's priority is the EU's priority, getting a good deal with President Trump over the tariffs. The tariffs would be devastating if they really were implemented, even on a lower reduced level. It would really affect the German car industry, the chemicals industry, and the pharmaceuticals industry. And actually, this would go against Merz's agenda and goal of pushing the German economy out of its doldrums. He really has to show results on this in order to push back the alternative for Germany, as is the far-right movement, and push Germany back into the orbit of the EU. That's why the tariff issue is just so dangerous for Germany and indeed for the European Union.
Judy, when you look at, I guess, some of the things that we really need to focus on, I mean, foreign policy is right there at the forefront, as you've mentioned. Do we know what kind of relationship the Chancellor Merz has with Donald Trump personally, if any?
Well, Chancellor Merz is an Atlanticist, but being an Atlanticist these days is rather a challenge, to say the least. We will have to see if and when Merz does travel to Washington, if he gets an invitation from Donald Trump. And it must be said that the White House isn't particularly a big fan of Germany because of its huge trade surplus, because of its role in the EU, because of its very powerful automobile industry. So Merz will have to work very, very hard to get some kind of rapport, if that's the right word, with President Trump. On the other hand, Merz doesn't want to go begging to Washington. If he does go to Washington, he wants all the EU member states behind him. And what is very interesting at the moment is that the European Commission President, Ursula von der Leyen, she hasn't actually had a proper tete-a-tete with President Trump yet. So we'll see how this is going to pan out over the coming weeks, not months, weeks. It's a sense of urgency. And the other foreign policy issue, of course, is defense spending in Ukraine. And now that the debt brake is finished, Merz is going to really push ahead to modernize the armed forces and really strengthen this kind of security umbrella for the European Union. This is going to be rather difficult to do.
I mean, I have to say, you know, the defense policies from Germany were a real game changer for Europe that we had announced a couple of months ago. Will Chancellor Merz be able to really get on with it and push it through?
Well, he has to. Europe needs a strong security outlook. It needs some kind of defense mechanisms, and we have no idea how President Trump is going to deal with NATO. I mean, he's given lots of threats, and the Europeans must spend more. The Europeans are spending more. But what is interesting now is that Chancellor Merz has money behind him to spend on defense, to spend on the infrastructure, and to help Ukraine. One other thing which is very important for this government's foreign policy, this is the first time for such a long time that the foreign ministry will be headed by a Christian Democrat. Before that, it used to be the Social Democrats or the Greens, and the last coalition with the Greens running the foreign ministry and Chancellor Scholz in the Chancellery, it was loggerheads the whole time over Ukraine, over China, over human rights, you name it. Now, Merz has consolidated the kind of foreign policy in the foreign ministry and in the Chancellery, and this is actually very important for speaking with one voice from the government.
Judy, we're also watching very carefully what happens between India and Pakistan. Is there a worry that this really escalates?
Yes. And of course, the European Union and Berlin, they're really wondering what kind of stance President Trump will take. The United States has very close relations with Pakistan and India, and both are very, very big military powers. And this is so dangerous now, what's happening, what it'll do for the stability of the region, what it will do for relations with Washington, what it'll do, how China will react to all of this. So escalation would be very, very dangerous. And one is hoping that the State Department or the White House will come in immediately and play some kind of diplomatic role which is urgently needed.
I mean, does China have a role in this? In talking peace?
China has a role in all sorts of things, but I think if you look at China's role actually in Syria, they waited for such a long time. But you know, these are big neighbors of China, and they must be China must be very, very anxious to see how this is being played out. Remember, Xi goes to Moscow today, and we'll be there tomorrow for the end of the Second World War. And so maybe there'll be discussions there what's going. But these are really dangerous times, and we'll have to see the reactions in China.
Yeah. Judy, thank you so much. Judy Dempsey, they're a senior fellow at Carnegie Europe. Up next, Bloomberg Brief with Danny Berger, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything.
You have had a number of games overseas in recent years, and in fact, you opened the season going to the opening game in Brazil. So do you expect to do more overseas games, and is that a part of your strategy?
It is. We had 5 last year. We expect to have 8 this year, which will be the highest we've ever had. Our hope would be at some stage to get to 16 games in the next few years. We think we could do that. I think it's an indication of the popularity of our game. Every time we take our game to a new market, Brazil's a great example of it, the fans go crazy for it. They sold out the tickets in less than 90 minutes. People had a wonderful time. It was the talk of the town. And I think it will be the basis and the sort of the match that lights the excitement and the popularity of the game in that market, as well as what we're doing around the world. So we're very excited by it. It's just one element of that strategy. You need to have television. You need to have activity and participation in the sport, and flag football is a big part of that. So all of those factors, I think, are going to be what we think will be a very successful formula to be a global sport.
Or do you ever envision having a team that's based overseas in Mexico City or in London?
Listen, we've talked an awful lot about it, and I think there are markets that could, without question, support an NFL franchise.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning from our global headquarters in New York City. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. A balancing act. The Fed decides today. Tension between growth and inflation cloud the outlook. Trade talk optimism. Futures gain as representatives from the U.S. and China are set to meet this week.
The Chinese team is traveling through Europe, and they will be in Switzerland also. So we will meet on Saturday and Sunday. We don't want to decouple. What we want is fair trade.
And unease in South Asia. India and Pakistan trade military strikes after a deadly attack last month in Kashmir. Well, it is Fed decision day, and we had 2 straight days of declines for this equity market. We attempt to undo that today. We are higher by 0.6% for both the NASDAQ and S&P 500 futures session. This gain likely having to do with those headlines that it appears we are getting closer to the U.S. and China reaching some sort of negotiations. That's set to happen in Switzerland. For this bond market, we had a solid 10-year auction yesterday. Yields moved lower yesterday. That, again, backtracks this morning. We are higher. All eyes on the Fed at 2 p.m., higher by 3 basis points on your 10-year yield at 4.32. 3 basis points as well for your 2-year yield. We're now pricing in less than 3/4 rate point cuts for 2025. Those are your overall markets. Let's get some stocks to watch this morning. Joining us is Bloomberg's Joe Easton. Hey, Joe.
Morning, Danny. So seeing a big gain in Novo Nordisk's ADRs today. The company actually downgrading its sales guidance due to competition for the obesity drug Wegovy. However, analysts saying this is already priced in after the stock fell about 50% over the past year. Then we're also looking at AMD, the semiconductor company with around a 160 billion market cap, warning of a hit from China tariffs, but actually the CEO playing up the prospects for AI on an analyst call. We have actually seen the stock recovering overnight. We're seeing that one, Advanced Micro, up 2% today. Then another big day in earnings. Disney is out. We're looking for subscriber growth in Disney Plus and ad spending, and also Uber, potentially any news on their robotic devices and taxi business. Keep an eye on that one. All of this on the Before the Bell opening wrap, as usual. Danny.
Joe, thank you very much. Bloomberg's Joe Easton, who will be back with us later in the hour. Also this hour, in just moments, we're going to be speaking to Jane Foley of Rabobank. Later in the hour, we'll catch up with Andrew Hollenhorst of Citi ahead of the Fed decision. And as the Fed decision comes closer, 2 p.m. today, Jane Foley, head of FX strategy at Rabobank, writes, on the back of Trump's trade war, Rabobank now sees the chances of a U.S. recession as being larger than 50%. That said, in view of the inflationary risks associated with tariffs, we don't expect the Fed to be able to cut rates as much as the market is expecting. Jane, I'm pleased to say, joins us now. Jane, gotta say that sure sounds like stagflation. Is that your base case?
It certainly does sound like that, doesn't it? Yes, and we've got some negative growth numbers penciled in for the US from the end of this year. So, looking at that, plus the inflationary aspect, that does indeed sound like stagflation. But of course, I think like everybody else, we're pretty on the consensus for today's Fed call, because what can Powell really say? The data today has been really not too bad. And like everyone else, I think we think he'll want to get off that stage and that press conference as quickly as he can.
It's been really interesting to look at the dollar through all of this, Jane, because the drivers seem to be ones that we don't typically associate with the dollar. For a bit, it was concerns of higher yields and policy uncertainty. The dollar strengthens today, likely because we're going to get talks between the U.S. and China finally. Do you expect this to continue to be the driver, whether or not tariffs are on or off, or the degree of tariffs?
Well, it is interesting, isn't it? The last couple of weeks, good news has been positive for the dollar, and that, of course, is really counter to what we previous to the Rose Garden address had associated with the safe haven dollar. But one thing that I think is really worth pointing out this week is that reaction, for instance, in the Taiwan dollar that we've had this week, a sharp movement in the Taiwan dollar. This perception that perhaps in Asia, as part of those trade negotiations, a stronger currency and a weaker dollar could be offered along the lines of what we were hearing a lot of chat about over the first part of this year, and that being some sort of Mar-a-Lago Accord, whereas the U.S. authorities may want a softer dollar. So those sort of indications are sort of very much in there, certainly this week, and that could really temper the stronger dollar reaction on the news that there will be some talks between China and the U.S.
So tempers stronger dollar reaction, Jane, but in favor of what? You've been writing a lot recently how some of the optimism of the euro might be overdone.
Well, you know what? I've heard so many stock allocators, the last few weeks. Really, I think we can probably go back into March and talk about, the fundamentals have changed, for the Eurozone, that loosening of the fiscal debt rate, for instance, in Germany. And I think we can also talk about the change in fundamentals in Japan, an economy that's emerged from 30 years of deflation, or is emerging and trying to emerge from that period. And from that point of view, I think with the market talking about recession for the US, investors are saying, well, look, the US stocks are certainly not the only story in town, which may have been the view, last year, the year before. There is opportunity in Europe. There is opportunity in Asia. But for Europe, I think there is the possibility that move into the euro could be overdone, because we've still got the Bundesbank talking about recession for Germany this year. Most forecasters aren't expecting that fiscal impulse to really push growth higher in 2026. So it is possible that there's been just too much optimism for Germany right now.
Speaking of too much optimism, Jane, another currency that has really benefited has been the Swissy, the Swiss franc versus the dollar, up some 10% just thereabouts this year. But this is what we heard from the SNB just yesterday. The SNB president saying the franc appreciated really a lot. We always said we'll intervene in FX if needed. We haven't ruled out cutting rates to zero or negative rates. Can you keep buying given that?
Well, I mean, we did see the Swiss franc fall on the back of those comments. Now, these comments aren't new. The Swiss National Bank has maintained an FX intervention policy for years. It used to say, well, look, we can't do quantitative easing in Switzerland because we don't have the depth of those capital markets. So we have FX intervention as a tool instead. So that's, how long this policy has been repeated by them. But they haven't intervened for a year or so. And, that there is the risk that if they do intervene, then the US Treasury could call them out as a currency manipulator, which won't be something that they clearly want. So that's not an optimal solution, even though it's a policy tool. And negative interest rates also have their costs. So they don't necessarily want to do either. I think last year they were quite proactive in their rate cutting cycles in order perhaps to avoid the situations that they're in now. But I think we will get more verbal intervention. And I think come their next policy meeting in June, we'll probably get interest rates at zero, and they may be forced to push them into negative territory later in this year as well.
I mean, I can't believe we're talking about ZIRP again, Jane. It feels like so long ago, and we've come so far. Listen, Jane, before I let you go, I just want to talk about Taiwan and the Taiwanese dollar. It has certainly stabilized in the last few days, but we saw this huge appreciation in it. And I wonder if there's any lesson to be learned, that maybe it acts as some sort of canary in the coal mine, that there are a lot of assets that are unhedged to the dollar, and that we might get other instances like this coming through this year as we see some of that weakness coming through the greenback.
I think this week, really, Asian currencies have really been in the thick of things. They're really quite interesting. And I think this is, in part, still some of the repercussions of these trade talks. What is going to come out in these trade talks? But it's also another part of this story is the asset flow out from the US. This is perception that there are other pro-growth stories in other parts of the world, that the US stock market is not the only game in town, and asset managers really trying to find different growth stories here. And I think this is just another sign of that. So the market has been moving into euro, moving into Japan, moving into other parts of Europe, and the dollar, the sort of the glimmer that the dollar has held for so many years has certainly dulled. And I think what's happened in Taiwan and Asia is just another part of that same story.
Jane, so wonderful to have you this morning, and we love looking at the new headquarters over at Rabobank. Looks like a very spiffy over there. Jane Foley, thank you so much for joining us, Jane Foley there of Rabobank. Okay, let's get to some other top stories that are trending on the terminal this morning. Novo Nordisk shares are higher by 6.5% this morning, even despite an earnings miss. The company's CFO said that he expects a step up in the second half on the back of lower competition. The pharma giant has been losing ground to Eli Lilly in the obesity shot market. Novo trimmed its financial forecast for the rest of the year. Elsewhere in earnings, BMW's EV sales in Europe helped reduce a decline in earnings in the first quarter. The German automaker faces challenges from slumping demand in both China and the U.S. and U.S. tariffs, but it said stabilization of inflation and interest rate cuts will boost demand this year. Shein and Temu both saw double-digit sales declines in the week after they hiked retail prices to cover the cost of increased U.S. tariffs. Credit and debit card data analyzed by Bloomberg reveals that Shein posted a 23% drop in observed U.S. sales between April 25th and May 1st. Coming up, China and the U.S. gear up for talks. The two nations aim to de-escalate the tariff standoff as both travel to Switzerland this week. We have the latest on your Bloomberg Brief after this break.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Today, the Fed decides.
It is the central banker's dilemma. Downside risk to growth, upside risk to inflation.
They are wait.
This is a serious moment. I do not think the Fed can just sit on the side.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
They're expecting stagflationary-like environment.
They are going to be on hold until they have hard evidence one way or another.
Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
The Chinese team is traveling through Europe, and they will be in Switzerland also. So we will meet on Saturday and Sunday. And look, we have shared interest that this isn't sustainable, as I said before, especially on the Chinese side.
Treasury Secretary Scott Bessent speaking on Fox News. China confirming the scheduled talks, with the foreign ministry spokesperson saying that Beijing will, quote, safeguard its interest in the talks with the U.S. and that the U.S. should stop threatening if it wants a deal. Joining us now from Shanghai is Bloomberg's Alan Wan. So, Alan, we have the Treasury Secretary saying that they've agreed to talk, and then on Saturday and Sunday, we will agree what we're going to talk about. So, talks to talk about talks. How close are we getting to this being a reality?
Well, I'll tell you what. I mean, the good news is that they're finally talking, right? Both sides are actually confirming that they're going to talk after weeks of denials, right? You had Trump saying that he wanted direct talks with Xi, and Beijing saying that no, you've got to follow protocol. So it's a good thing that they're talking, but these talks are just going to lead to probably protracted talks. The bad news is that, and one of the reasons why stocks sort of paired during the day in China, is that few people expect any breakthroughs from these talks. And today, with the PBOC and other ministries actually cutting policy rates, cutting RRR, they're getting the Chinese economy ready for protracted negotiations. They're trying to make the Chinese economy more resilient in the event that no deal will be made in the next several months.
I want to get to that PBOC support package in a bit, Alan, but first, just on this sort of idea, we're going to have Bessent and Jameson Greer heading to Switzerland for these talks. What is the threat, and perhaps this is kind of what you're alluding to, that China realizes that as long as one man isn't in the room, that is Donald Trump, that all this could be undone?
Well, I mean, definitely. This happened during the first Trump term, where, what was it, Liu He thought that he had a deal, and then President Trump decided to back away from it. So there's always a concern that whatever Greer and Bessent agree on with He Lifeng, the vice premier, that it can be easily undone by President Trump. I mean, he himself has said that he will set tariff levels himself, and also there's a concern that these talks could go badly as well. There's always that concern, right?
Yeah, certainly. And just a programming note for our audience, one to watch out for before those talks, 10 a.m. Eastern, there's going to be live coverage of the Treasury Secretary Bessent's testimony before the House Financial Services Committee. So, Alan, we're going to hear from the Treasury Secretary today. We already heard from China earlier. You mentioned the PBOC support package. What exactly did we get?
Well, I mean, it was a lot of people were happy. They were impressed with the package, the size of the package. The PwC cut the RR rate, releasing 1 trillion yen of funds. They cut the policy rate as well. They cut the relending rates. All this to support the economy, ensuring that liquidity is loose and there's money available for a lot of these small and large manufacturers if they're facing pressure from all these tariffs and slowing trade. But one issue is whether or not monetary policy loosening is enough. A lot of economists are also calling for fiscal measures as well. I mean, that could be determined whether or not we saw this, mild gain today become maybe a much larger rally.
Yeah, fair enough. Alan, thank you so much for joining us. Appreciate your time. That is Bloomberg's Alan Wan. Coming up, escalating tensions in South Asia, Pakistan and India trade military strikes. We'll have the latest for you next on your Bloomberg Brief.
In case you missed it, on Bloomberg Open Interest, how much would it cost to bring production here, Rebecca? I mean, what kind of upcharge would you be looking at?
There is no handbag infrastructure in America anymore besides a couple of small factories in New York City. So not only would we have to build a factory that could make the amount of units we're trying to make, but we'd have to bring back hardware manufacturing, bring back tanning and leather. I mean, these are all things that are purchased overseas and assembled. If you want this to really work, give us grants to build factories, give us several years of tariff breaks in order to make these things happen, and then we'd love to make in America. It just right now, if I were to switch everything to America, my price would double, and my consumer is not here for that. As small businesses doing under $50 million, keep us alive. We are employing millions of people collectively and affecting livelihoods across the U.S.
Don't miss Open Interest live weekdays.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you some front page news and see what's making headlines around the world. First up, the Washington Post has this on their front page, beginning with the conclave in Rome. As the Catholic Church elects a new pope, cardinals under the age of 80 will enter the chapel to begin voting later today and won't be released until a new pope is found. Next up, the Journal has this reporting on their front page that the U.S. is stepping up its intelligence gathering efforts around Greenland. Journal sources reveal that several high-ranking national intelligence officials sent a directive to spy on Greenland's independence movement and learn more about attitudes towards America. And basically every front page leading with this morning, including the New York Times, with India striking Pakistan and the latter country vowing to respond. The strikes follow 2 weeks after a terrorist attack killed 26 civilians in Kashmir. Let's stay on this story. For more, we are joined by Ruchi Bhatia, South Asia Economy Editor in New Delhi. Ruchi, thank you so much for joining us. What have been the developments in the last few hours?
Well, India said that it has conducted military strikes in Pakistan, and Pakistan, on the other hand, said that they have downed 5 Indian fighter jet planes, and this is an escalation of the two nuclear-armed nations. The tensions have been simmering for the last few days, ever since 26 people were killed in an attack in Indian-administered Kashmir, and since then, this was something that we were anticipating for a very long time. Remember, Prime Minister Narendra Modi had vowed to retaliate. He had said that the perpetrators of this crime will be punished, and that's exactly what India has done. In fact, in the early hours of Wednesday, India said that they had hit 9 military targets, but they said that this was a very precise and restrained action from India's end. As far as Pakistan is concerned, they have said that if India, escalates the situation, they will not back down. They will look to retaliate. This is really a lot of tough talk that we're seeing from both the sides. In fact, various global leaders have also reached out to both India and Pakistan, including top leaders from the US and Russia, asking both the countries to show some restraint, look for a dialogue and look for a peaceful solution to this crisis. Having said that, remember, as I said, these tensions have been simmering for a very long time. We did see tit-for-tat measures from both ends, with the expulsion of diplomats, the scrapping of the decades-old water-sharing treaty, as well as and closure of airspaces. So this is something that we're keeping a very close watch on. Today we had the Indian Prime Minister chairing a cabinet committee on security meeting. On the Pakistan side, we also saw the National Security Committee meeting as well. So the tempers are really flaring up on both sides at the moment.
It also comes at a very delicate time politically for India, Ruchi, as they try to engage in U.S. talks over trade, over fears of what tariffs might do to the U.S. economy. What is the economic outlook if we do see some sort of escalation in this conflict?
Oh, absolutely. This has not come in at a good time at all, not only for India, but also for Pakistan. For India, for example, we're in the midst of trade talks with the US. India just concluded the free trade agreement with the UK just yesterday, and its economy as well is not growing at the kind of 8% levels that we saw in the last few years. In fact, growth this year is set to be just about 6.5%, though India will still be one of the fastest growing economies in the world, but growth is slowing down. Expansion is slowing down, and that is a big worry for India. On the other hand, for Pakistan, the nation that was just coming out of the crisis after it almost averted a default in 2023, we're seeing the IMF board will be taking up the loan of almost $2.5 billion for Pakistan on the 9th of May. So the timing for both the countries could not have, couldn't have been good. Having said that, there is a serious risk that if this escalates further, then there's going to be an economic cost that both the countries will have to bear.
Ruchi, thank you so much for your coverage this morning. We really appreciate it. Ruchi Bhatia in New Delhi. Now, even with the geopolitical strife, we're not seeing really a reaction in many haven assets. In fact, gold dropping quite a bit this morning, down 1.7%. Instead, gold and, let's be honest, most risk assets have been trading in line in the progress of U.S. and China talks. Gold gets a bid when it seems like tariffs will be on. Some confidence this morning. There'll be talks about U.S. and China tariffs. So that meaning gold at $3,300. Coming up, we count down to the Fed.
is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Headquarters in New York City. Welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. A balancing act. The Fed decides today. Tension between growth and inflation cloud the outlook. Trade talk optimism. Futures gain as representatives from the U.S. and China are set to meet this weekend.
The Chinese team is traveling through Europe, and they will be in Switzerland also. So we will meet on Saturday and Sunday. We don't want to decouple. What we want is fair trade.
And unease in South Asia. India and Pakistan trade military strikes after a deadly attack last month in Kashmir. Let's get to these markets. It was 2 straight days of declines. We try to undo that this morning as we work through that with U.S. and China trade talks getting closer to reality. We're up about 0.5% for both the S&P and NASDAQ 100 futures session. For your bond market, it was a decent 10-year auction yesterday. Lower yields yesterday give way to higher yields this morning. We're up about 2.5 basis points for your 2-year yield at 3.8. Your 10-year yield up 2 basis points at 4.31. The main highlight, 2 p.m., the Fed decides, currently pricing in about 3.25 point rate cuts for 2025. Those are your markets. Let's get some stocks to watch. With that, and back with us is Bloomberg's Joe Easton. Good morning, Joe.
Hey, Danny. So Novo Nordisk ADR's looking really strong in the pre-market today. The company actually missing expectations on its obesity drug sales in terms of the forecast, but analysts saying this is pretty much priced into the stock after it fell around 50% on a 1-year basis. And Novo ADR's now up around 7.4%. Then over in the chip space, Advanced Micro Devices. This one actually did look a little bit weak in terms of the sales because of the restrictions on sales to China, but actually the AI impact seen as a boost for the company. The CEO was talking about the strength in AI demand, and therefore we're seeing the stock rebounding today. Then in terms of the earnings, we're looking at Disney. Potentially we are going to see a drop down in subscribers, but the price is going up, so look out for those earnings for Disney. And also Uber with that robotic taxi partnership with Alphabet in the spotlight ahead of earnings from both of those companies. Both of them just seeing small gains ahead of those reports later this morning, Danny.
Some of the stocks to watch out for today. Joe, thank you so much. Bloomberg's Joe Easton. Also on deck today, 2 p.m., the Fed's 3rd rate decision of this year. We caught up with Apollo's Torsten Slok on his expectations for the rate path ahead.
We do know, because of the trade war, that inflation will be going up roughly around 1 percentage point over the next 12 months, according to the Tax Foundation and the Yale Budget Lab. So if that's the case, they should be keeping rates higher for longer. And if growth is slowing down, of course, they should be cutting. But the dot plot, Danny, to your question, is to some extent revealing that they do think that the next move should be lower. So that is, in some sense, telling you that they're leaning towards cuts.
Joining us now is Andrew Hollenhorst, Chief U.S. Economist at Citi. Andrew, great to see you. We can talk about the look forward in a moment, but just is this going to be a snoozer of a meeting this time around?
I think Chair Powell and the committee would like it to be one. I mean, they're really just in wait-and-see mode. There's so much uncertainty about policy, so much uncertainty about the economy, so just trying to keep options open and not do anything at this meeting.
Yeah, just don't tell surveillance I said that. We'll have their special, which everyone should tune into, by the way. So in the look forward, because maybe that's more important in understanding the reaction function from here, it's the classic goalkeeper's dilemma. Dive right for growth, dive left for inflation. Left for inflation, I got my left and right wrong. Which way should they go? What are they going to be prioritizing, this Fed?
I think what they have to think about is what is going to be the persistent shock to the economy? Are we going to have persistent inflation? Are we going to have persistent higher unemployment? And it's really difficult to make that judgment because they tried to do this a couple of years ago. They thought inflation was going to be transitory. It turned out not to be transitory, but I think it's a very different situation now. We have demand that's cooling. We have a shock that is actually going to cool demand further. And that means that it's hard to get inflation going in a persistent way. We will see inflation. Torsten is absolutely right. We have higher tariffs. That's going to raise the cost of goods. That should boost inflation. But it should be really a one-time inflation. I don't think we're going to hear that from Fed officials today. I think they're not going to want to make that conclusion today. But I think that's where we'll end up. That means they lean towards unemployment, the labor market mandate, and that means they're cutting rates later this year.
How bad does it need to look in the labor market for them to start to vocalize this?
So what we heard from Governor Waller, and he does tend to be a little bit more dovish than the rest of the committee, is if the unemployment rate is going up 0.2 percentage point per month, that would be something that would concern him. Now, right now, the unemployment rate has just been stable for the last 6 months or longer, so that's why they can just be in this wait-and-see mode, and I think they stay there. If we start to see that unemployment rate that looks like it's going to go above, say, 4.5%, then I think they get worried and they start cutting.
What is your assumption in just where the unemployment rate could go? Because we have seen this remarkable strength in the labor market that for the past few years, I think has surprised most.
Yeah, we've been surprised. The unemployment rate has crept higher, but then, like I said, it's really just stabilized here. I think what we're seeing now is an economy where the layoff rate is really low. So it's not that a lot of people are getting pushed out of jobs, but the hiring rate is also low. So it's hard to get a job if you're not in a job. And that makes me concerned about hitting this economy with a shock that is going to lead to lower hiring, maybe even some layoffs in some sectors. And we know we'll have some government layoffs as well. And that means that those individuals will have a tough time getting jobs again. That means the unemployment rate will creep higher. So we think the unemployment rate will go up to something like 5% over the course of this year. Again, huge uncertainty around that. But that upward trajectory, that's what's going to concern the Fed. That's what would get them to cut rates.
Well, it's really interesting because in Scott Bessent, the Treasury Secretary's pitch to investors at Milken, he said this idea that, look, you're worried about the economy, but it's not just tariffs. It's a three-legged stool. We'll also have tax cuts and deregulation. If we do get that coming out of the White House, does it help alleviate these pressures at all? Or is the damage done and the unemployment rate and the labor market still likely has some cooling to go from here?
Well, I think there is a timing issue there where tariffs have increased already. Uncertainty around tariffs has already gone up. That means firms are already going to be pulling back. We're thinking about this fiscal bill, which is moving through Congress now, maybe getting passed this month, maybe more likely getting passed sometime in July, really becomes effective and starts changing the economy at the end of this year into 2026. So there is a timing issue there. And then there are also big questions about what will be in this fiscal bill. We know that there'll be an extension of the existing tax cuts. Will there be new tax cuts? What's going to happen with spending? Still a lot of questions to answer there.
Over the weekend, Mark Carney, now the Prime Minister of Canada, made a really interesting comparison between the U.S., what it's going through now in Brexit, and of course he knows a thing or two, being at the helm of the BOE at the time, basically saying that this is a comparable environment to Brexit, where you reduce trade relations and you get slower growth, higher inflation, higher interest rates, volatility, weaker currency, and a weaker economy. Is that an apt parallel, this idea that it's not a sudden shock or a crisis? It's just kind of an environment where everything gets a little bit worse.
I mean, I think Brexit was a somewhat different scenario where there was this long period of negotiation before the UK really fully exited, whereas in this case, we know that tariffs went up very quickly. So I think that this will be a more direct, a more acute shock to the economy. So that could mean that we see more in the data up front. And that was one of the surprises with Brexit, I think, is that it took longer for things to materialize in the data. This could happen more quickly, but also because of the acute nature of it, it could move through the economy more quickly as well. So I think there are some parallels there, but some important differences.
So this idea that we're on the precipice of change, that it's a regime shift, and then after this, everything is different. Dollar's a bit weaker, things are different. Is that not necessarily the case if it works through the economy quicker?
Well, I think that the question is, do we stabilize at relatively low tariff levels? Are we going to have 10% tariffs with most countries and things just stabilize there? And then you could kind of see the economy stabilizing, or are we entering now a prolonged period of uncertainty with tariffs that are potentially much higher? And that's really still to be determined. That's going to depend on what happens with policy over the next few weeks and the next few months.
Can I just get, before you go, one of the persistent questions, and I wonder what your answer to the puzzle is. It's just the gap between the soft and the hard data. Has something changed in the survey data? And the Fed has kind of hinted that they think this might be the case, that something's changed in the survey data, and it's just not as a reliable indicator of where the economy goes.
Just empirically, just looking at the data, after COVID, we know that the soft data has not been as good a guide for the hard data. Sometimes, and I think economists always think this, sometimes people tell you things, but then they do different things than what they tell you. Right now, though, we are seeing pretty consistently across the soft data this kind of downshift, and we hear that in corporate anecdotes as well. So there's a lot of kind of mutually corroborating factors right now that make us think the hard data will follow the soft data lower, but to be determined.
Yeah, well, all those consumer companies really starting to sound concerned about where things go from here. Andrew, thank you so much for joining us. We always appreciate your time, especially heading into a Fed decision. That is Citi's Andrew Hollenhorst. Coming up, U.S. and Chinese reps prepare to meet in Switzerland later this week. We're going to have more on the trade talks next on your Bloomberg Brief.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
In case you missed it, on the close.
I think our sports fund is very exciting. We've invested in a number of new leagues that are doing exceptionally well. A number of the investments we've made, we've already seen prices that have gone up already about 50% plus. So what you find in new leagues and new teams is if you're right, it's going to grow exponentially, right? So the whole key and the nice thing about that is you see the ratings the next day. So I can tell you if it's grown, like we've invested in PBR and professional bull riding. That league is growing 30% plus a year.
There's professional bull riding?
Yes, do you want to get on a bull? You'll end up, if you could stay 8 seconds.
I know, this sounds awesome. Do I have to go I don't have to go to rodeo for that. That's
No, you could do it. We are here in New York.
Okay.
We own the New York Mavericks, so you can come anytime you want to go.
Okay.
Come, you'll love it. Yeah, we'll chat offline.
Don't miss the close, live every weekday.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
The Chinese team is traveling through Europe, and they will be in Switzerland also. So we will meet on Saturday and Sunday. And, look, we have shared interest that this isn't sustainable, as I said before, especially on the Chinese side.
Treasury Secretary Scott Bessent speaking on Fox News as the U.S. and China look to de-escalate trade tensions. China's foreign ministry spokesperson saying in the daily briefing earlier that Beijing will safeguard its interests in the talks with the U.S. and that the U.S. should stop threatening if it wants a deal. Bloomberg's James Mager now joins us out of Beijing. James, what are we expecting from the talks this weekend?
I think the expectations are that, while there's not going to be a deal announced after this first meeting, there is going to be, substantial talks. They've set aside 2 days for the meetings. Hurley Feng, who's the vice premier and is in charge of economic policy across China, he's going to be traveling to the meeting. The chief trade representative, or the chief trade negotiator, is also going. He's just been appointed to that role. And obviously Scott Bessent and Jameson Greer are also flying halfway across the world for these talks. So I think on both sides there is an expectation that there will be some real discussion. Obviously, Scott Bessent there on that interview was saying they're looking to de-escalate the tensions or de-escalate the relationship a little bit and to put it on a better track. But he also did say after that they are still looking to decouple specific sectors of the U.S. economy from China. He specifically mentioned pharmaceuticals, steel, and semiconductors. So the expectation that this is the first meeting that the two sides have had really since Donald Trump came out with the tariffs, or since Donald Trump actually took office in January. And so hopefully they will sit down, get to a place where they can actually start talking to each other, and hopefully over the next couple of weeks and months, we'll see an improvement in ties between the two, which hopefully will lead to a reduction in tariffs. But it's very early days yet.
Very early days. And James, just to reiterate what we heard from China overnight in their briefing, saying that the U.S. should stop threatening if it wants a deal, and that the U.S. should show sincerity. Is there still a disconnect between China and the U.S. and the willingness at this point to reach some sort of agreement?
I asked that, actually, that was a response to my question earlier today. And what I was asking about was China initially had said, we're not going to talk at all unless you remove all of the tariffs that you put on us since January. So, this agreement for the Chinese to go to Switzerland to meet and to talk for 2 days with the U.S. is already a step back from their initial maximalist negotiating stance, where they said, unless we go back to the tariffs where they were on January 19, there is no discussion at all. So I think there is a willingness on the Chinese side to deal. By making that change in their stance, they're showing they're willing to at least meet halfway, or at least halfway around the world. And so, but there is also, they do want to be treated with what they term respect. They don't want to go into a meeting and be treated like Vladimir Zelensky was when he went to the White House. They don't want to be publicly humiliated like Mark Carney seemed to have been in the Oval Office yesterday. And they do want, if the deal is done, if they agree a deal at some point with Scott Bessent or Jameson Greer or whoever the U.S. chief trade representative is, they do want to have the surety that deal will be actually fulfilled and isn't going to be suddenly changed. And I think also another thing they do want is they're not just negotiating about the Liberation Day tariffs that President Trump announced in April. They also want reductions or the removal of the tariffs that put on China, because the U.S. claims it's responsible for the fentanyl pandemic. And they're also quite concerned about the other tariffs on things like semiconductors, pharmaceuticals, and auto parts that are meant to be coming in the next few days. So, there's a lot of different things that they will be wanting to talk on, but they they are concerned about those things that they express. They want to deal, to discuss this as equals, and they really don't want to be surprised.
James, thank you so much for that. Really great to get your thoughts after that briefing. That is Bloomberg's James Mager. So we've heard from the Chinese. We will hear from the Treasury Secretary Scott Bessent. A live coverage of his testimony before the House Financial Services Committee begins today on This Morning. Now, here's a stock that we've been keeping our eye on. Novo Nordisk is getting a really big rally this morning, up nearly 6% in the Danish trade, despite an earnings miss and a guidance cut. The Danish drug maker expecting the competition for its blockbuster obesity shot, Wegovy, will subside later this year. Bloomberg caught up with the CFO earlier.
The key backdrop on obesity is that this is a market development strategy. So right now, if you take it in the US, then we're only looking at a few million patients being served by the industry in the US on branded pharmaceuticals for treatment of obesity, out of a total potential of 110 million. So this is a market built, and as a consequence, really not a price or market share competition at this point in time.
Bloomberg's Sarah Sholin joins us now from Copenhagen. Sarah, can you circle this square? Both a guidance cut, yet at the same time saying competition will be less for them.
Yeah, I think we were all surprised to see this morning how the shares were performing. We had heard the guidance cuts. We saw how there was an earnings miss. And then when the market opened, really saw shares started to rally. And as you said, they're up almost 5% here in Copenhagen. Part of this explanation is, as the CFO also alludes to, there is still a lot of potential for Wegovy, a lot of patients that they can still get on it. They're taking steps to widen their offering in the U.S. They just made a deal with CVS Health last week to put them on the preferred list, so more will become available to more patients. Novo Nordisk is also trying to get into telehealth, and they're expecting to see less competition from some of these compounding, essentially these copy products that really have been squeezing a little bit in the first quarter. And some of the investors, they're talking about this as a buying opportunity. The stock has really plummeted over the last 6 months. So now when we have a bit more visibility, and now we know what we can expect in terms of their guidance, there's a bit of a relief.
There has been also a lot of pressure coming from the likes of Eli Lilly's and others, Sarah, over fear of what happens when someone else develops a pill. What happens when someone else makes progress ahead of Novo Nordisk? How big of a threat is that for the company at this point?
Well, if you ask Novo Nordisk, they're saying that the cake is basically big enough for everyone, and this is expected to be a really, really big market. Novo Nordisk has seen competition really heat up with Eli Lilly over the last 3 months. Prescriptions have been higher at Eli Lilly. They've seen more growth, but they're both trying to develop obesity pills. They have new products in the pipeline, and it's really too early to say who's going to win this race, and most investors and analysts do believe that there is room for more competitors to come in.
Sarah, thank you so much. That is Bloomberg's Sarah Sholin. Now, we've also got our eye on Disney this morning. Shares are higher in the pre-market trade ahead of its fiscal second quarter results later this morning. Those shares up 1%. Joining us to take a look at them is Bloomberg Intelligence media analyst Geetha Raghunathan. Geetha, great to see you this morning. Thanks for getting up early for us. What are you expecting from Disney today?
Yeah, thanks so much, Danny. So Disney is a really complex company, right? There are so many different moving parts. I think the biggest source of investor concern is really going to be any commentary around the theme parks. I think the quarter that they're going to report, we're going to see fairly resilient theme park demand. As far as streaming is concerned, I mean, this is again another area that is fairly positive for them, because remember, they've really kind of doubled down on streaming profitability. So even though you're going to see them lose some subscribers in the streaming segment, profits are still going to be pretty strong. And I think ultimately what we're going to see is that, as far as fiscal 2025 is concerned, I think their guidance for high single-digit EPS growth is pretty much intact. But again, I think, Danny, it's going to come down very much to that commentary on theme parks, because this is really sensitive to the, the health of the economy, to consumer sentiment. And again, remember, theme parks brings in about 55 to 60% of the total company's profit.
Not to mention, it operates 2 resorts in China. Geetha, I'd have to imagine that anything trade-related will be top of mind, especially after Trump's Truth Social post earlier this week saying an 100% tariff on films not made in the U.S. Now, there's a question of how that would actually be calculated. What do you expect Disney to say in regards to what an impact could look like for them?
Yeah, it's really, really hard to tell. I mean, that was a pretty cryptic post. We don't know, exactly the 100% tariff or what exactly it's going to be imposed on, whether it's just going to be movies, whether it's going to be, TV shows, whether it's just going to be theatrical releases. So a lot yet to be kind of determined there. But I think Disney has a lot of different levers that they can pull. That said, for any studio, including Disney, remember, there is this big threat of, yes, President Trump could have those 100% tariffs, but then what about retaliatory tariffs? Because, for most domestic studios, if they generate about $1 billion in domestic box office. They're generating about $3 to $4 billion globally. So it could actually have, a reverse effect and completely backfire in terms of supporting the entire movie industry. So we've got to be a little bit careful. But I think Disney, Danny, has a lot of different levers that they can pull. They've been doing a really good job on the cost front. They've slashed their content budget from about $33 billion just a few years ago to $23 billion this year. So I think overall they are in a very good place. But again, I think a lot of the commentary is going to come down to, of course, as you just pointed out, tariffs and the overall health and what that could have, the impact that could have on the business.
All right, we'll see what they say. The report comes before the market open. Geeta, thank you so much. That is Geeta Ranganathan of Bloomberg Intelligence. Coming up, we're going to set you up for your trading day on this Wednesday. We got earnings and a Fed decision. That's next on your Bloomberg Brief.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Let's get you set up for your trading day on this Wednesday. We're going to have some earnings before the bell. Both Disney and Uber will report. Then Treasury Secretary Scott Bessent will be testifying before the House Financial Services Committee. That's at 10 a.m. Eastern. And then it will be the main event. The Fed will announce its rate decision at 2 p.m. That is followed by Chair Powell's press conference at 2:30 p.m. So risk markets are higher. We are seeing a rally in futures. Check out what gold is doing this morning. It is down 1.7%. It's still at a very high level. It keeps hitting record after record, just above 3,300. But it is every time we get indications of moving further on U.S. and China talks. That seems to be what's dictating the price of gold as we back off on that with representatives from the U.S., including Scott Bessent and Jameson Greer, meeting with Chinese representatives in Switzerland over the weekend. All right, that is it for Bloomberg Brief Surveillance. We'll start the countdown to the Fed. This is Bloomberg.
what would it mean for India to host the Olympics?
Heslinda, I don't think it's my dream alone. I think it's a dream of 1.4 billion Indians to see the Olympics being held in India. I think once sport takes over, the transformation will be seen, not only in the lives of the youths, but in the economy of our country. India is one of the biggest centers for digital usage, and 1/3 of the viewership of the Olympic channel comes from India. So India as a sporting market is huge.
Countries which have hosted the Olympics have always grappled with the issue of infrastructure, for instance. Building it is one thing, maintaining it is another. How can India do it differently if it were to host the Olympics?
So I think we're talking about innovation and sustainability. And I think the same holds for holding the Olympics. What if you look at a sustainable model? What if you look at refurbishing old stadiums, reusing what we have? So I think the move has to be a sustainable move.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is a Fed that could be on hold for a long time.
The economy is running okay right now. They don't want to get ahead of this.
Powell's going to be very hawkish.
The Fed's in a tough place. I'm expecting to hear not a whole lot.
The Fed's hands are tied to deliver the kinds of cuts that we've seen in prior cutting cycles.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, preparing to de-escalate.
The world has been coming to the U.S., and China has been the missing piece. What we're going to do in Switzerland is we've agreed to talk. Then on Saturday and Sunday, we will agree what we're going to talk about. My sense is that this will be about de-escalation, not about the big trade deal. But we've got to de-escalate before we can move forward.
Talks are scheduled between the US and China as both sides look to dial down the temperature. China's central bank choosing to cut interest rates heading into trade negotiations this weekend, just as the Fed is set to leave rates unchanged this afternoon. The committee facing a wide range of outcomes for the year ahead and beyond.
And since the last Fed meeting, what we've seen, if you look at just the overall change in yields, overall change in markets, isn't that great, but everything has changed when you actually see how some of the tariff policies have been implemented. The question for the Fed at this meeting is not necessarily what they're going to do. They're going to try to get off the stage as quickly as possible and fade back into the background. It's how they telegraph going forward what the biggest risk is at a time where suddenly the market is starting to really embrace the idea of stagflationary-like conditions.
A lot has changed since March 19th, the generational shift potentially in trade policy in the Fed. The Fed's now facing down the outcome of talks, which could be 100% tariffs on China, 50% tariffs on China, 10% tariffs on China. Nobody knows.
We don't know the rate, and this is the strategic uncertainty that the Treasury Secretary has spoken about. What we do know is that this is a significant step towards de-escalation. It's not towards a deal. But the fact of the matter is they are going to have this high-stakes meeting to have talks. So the direction of travel is likely going to be tariffs coming down, and that tension between Beijing and Washington just getting a little bit more loose.
We've got a lot to get through this morning. Looking to snap a two-day slide on the S&P 500. Equity futures positive by 0.5%. Coming up this hour, we'll catch up with Julian Emanuel of Evercore as the US and China plan to negotiate. We'll speak to the former senior Trump trade advisor Kellyanne Shaw and why Francis Donald of RBC is calling uncertainty the new normal. We begin this hour with stocks pushing higher on optimism for US-China trade talks. Joining us now from the nation's capital, Bloomberg's Tyler Kendall. Tyler, good morning. Walk us through the focus of these talks this weekend.
Yeah, hey, John, good morning. Well, this is considered to be the formal jumpstart of negotiations with China after Treasury Secretary Scott Bessent told lawmakers yesterday that they had not started talks as of yet. In an interview, he declined to say who called who first, saying instead that this is the result of many talks over time. Now, you mentioned there Saturday and Sunday. The goal, our understanding is it really has to be all about de-escalation first before they can get into any sort of talks about a potential trade deal. China has, of course, called on the U.S. to remove tariffs on a unilateral basis. And while the White House still insists that Beijing has to take the first step to de-escalate, ultimately, President Trump has signaled a willingness to lower tariffs on Chinese imports, saying that the current situation amounts to a trade embargo. And Scott Bessent said in an interview that everything is on the table. Now, not necessarily new sentiments from this White House, but does illustrate that softer tone that we've heard from officials in recent weeks that have led us to today. Of course, still, though, the list of grievances against China is long, anything from fentanyl to TikTok. But Scott Bessent did make clear in an interview yesterday that the ultimate goal here is not to decouple from China completely, but rather just from those strategic industries. John, we'll have to see how this ends up shaking out. President Trump in recent days has said that if negotiations don't go well, he's willing to just set a rate. And Bessent said his message to Wall Street on that is to understand it's all about strategic uncertainty, as China's Commerce Ministry in a statement this morning said that they hope the U.S. can be more sincere going forward.
The Treasury Secretary yesterday in that interview, Tyler on Fox News, talking about how him and Trump, they have all the information, but they're not going to disclose it. They don't want to show their hand. But he did say, as you mentioned, they want to decouple when it comes to things like textiles. They don't, but they want to decouple when it comes to national security issues. That's de-risking. So what kind of sectors are we looking at?
Right, exactly. It's really those sectors that we've already sort of seen the administration point out, particularly when it comes to their Section 232 tariffs. That's steel and aluminum, also pharmaceuticals, as we await potentially in the next 2 weeks, President Trump saying that we could see those sector-specific tariffs put into place there. We have to keep in mind that when these talks do officially get underway, it's going to be a lot about forward-looking, about, as you're talking about, de-risking, fentanyl concerns, TikTok concerns, but also these talks are going to touch on previous concerns. Treasury Secretary Scott Bessent has said time and time again that he also wants to revisit some of the lack of compliance under the Phase 1 trade deal. You'll recall during his confirmation hearing, he even floated that he would be interested in putting in some sort of buyback catch-up provisions to hold China accountable, particularly when it comes to agricultural purchases.
Tyler Kendall. Tyler, thank you. Down in Washington, D.C., Elisa, this market is just happy there's talks. They don't care who initiated them. They just want talks. At some point, we've got to think about substance. Anne-Marie's talked about this repeatedly. It took 18 months last time around to come to an agreement. How long is it going to take this time around?
And not just to get to an agreement, to get to the contours of what the ultimate goal actually looks like and what kind of economy are we actually heading toward. Francis Donald of RBC, who's coming up later this hour, talked about how it's not recession or not recession. It's the idea of how much growth slows and how much prices increase and what the capacity is for the consumer to absorb that.
Here's the take from Evercore. Julian Emmanuel is somewhat cautious. Here's the quote from him. Given the uncertainty on policy and the economy, and with stocks expensive, 3+ steps forward rally is set to yield to 2 steps back correction. Julian joins us now for more. Julian, good morning.
Good morning.
I want to give you some credit. A number of weeks ago, still a lot of panic out there, a lack of confidence, and you said we've seen the lows, recession averted. That certainly looks like a good call. This morning, at least. Can things change and how quickly?
Well, it's amazing, John, because when you think about it, right, as long-term investors, we are supposed to be thinking 12, 24, 36 months in advance. And in this environment, there is so much news and so much change that you can barely think 12, 24, or 36 hours in advance. And that was really part of the condition that set up that low on April 7th. You know, just abject panic about the state of the economy, you know, the need to de-risk. And from our point of view, we do believe that you are going to, and it's obviously a difficult path, avert the recession, barely. But again, when we think about where the market is right now, there's that high level of uncertainty that makes it, you know, a difficult proposition to commit capital long term.
Lisa framed the economic outcomes quite well. This is not just about recession or no recession, and we'll continue that conversation later on this morning. We've seen growth expectations come down from 2 to somewhere closer to 0. And I just wonder what your expectations are now for nominal growth in the year ahead, and what you need to see from these talks between the US and China. What's achievable? What's reasonable?
Well, I think the acknowledgement, and I think Secretary Bessent is painting it the correct way, is that this is a process. It's going to take time. It's going to take a number of months. There will probably be wins announced, small ones, over the next several weeks. Obviously, TikTok is an issue that's coming up again in reasonably short order. But from our point of view, again, just the fact that the process is going in the right direction is a plus. But at the end of the day, and as you said at the top of the show, we don't know where the landing zone is. And if the landing zone is a global weighted tariff rate somewhere of around 15 to 17%, that's still extraordinarily high by historical standards. And that brings you to growth in our mind. We're looking for 0.9 for the year.
Is this a stagflation type environment that calls for a stagflation type playbook that we haven't seen for many years?
Well, we would actually say that, and again, in true market discounting fashion, is that that's already been discounted. So in the stagflation playbook, the market averages annually a 10% decline, led by sectors like energy and consumer staples. And we've seen in various points of the last few months, those themes play out. To us, it's actually, again, I go back to what I said a little while ago, to the extent possible and necessary, we want to look through this under the assumption that all sides are incentivized to make sure the global economy stays on course. So we think that now's the time to re-engage in the longer-term themes of the sectors that were leading prior to the sell-off and the sectors that we think are going to continue to lead, technology-centric.
Okay, you say you look through this, but what is this that we're looking through? And I think about what you just said, which is the market's pricing in a stagflationary-like scenario, but they're not necessarily pricing in a Federal Reserve that responds to stagflation. They are actually pricing in a Federal Reserve that responds to something more like recession or more like some kind of sort of negative growth shock that maybe isn't in the cards if we have a stagflation type of environment. How much is that the ultimate wild card? Whether the Fed is going to respond to this like some sort of recessionary or recessionary-like condition versus stagflation, which is much more difficult.
So look, there's no question about the fact that we will find out, we already know this, but we'll find out more, that the Fed's hands are in fact tied to a certain extent, and that obviously goes back to the ratcheting higher of inflation expectations. But ultimately, I go back to Chair Powell's use of the T word, transitory, a number of weeks ago. I don't think he would have used that without having true conviction, whether it's a function of demand moderating inflation.
It has happened before, but go on.
Well, you try not to repeat the same mistakes, but actually to us, that's the path forward. And I would say that, in fact, as we've seen in other times over the last couple of years, if we take the under on the number of cuts the market is pricing, that will end up being a market positive.
How challenging is it going to be as these talks start? And to Jonathan's point, first time around 18 months, we see fits and starts sometimes when it comes to these negotiations. How challenging is it going to be to keep your head on and look straight ahead and say, I'm not going to get distracted by all the stop and start and go and potentially some of the rhetoric that will come from this?
Well, that's kind of why we're cautious in the near term, within the context of our view that April 7th low was the resumption of the structural bull market, that at some point down the road we are going to see new all-time highs. But to your point, it's even more of a challenge because we know we're about to get data that's going to scare us over the next number of weeks and months.
What does scary data look like?
To us, it all goes back to the labor market. So the thing that we focus on the most is the high-frequency weekly jobless claims. If that starts nudging towards 300,000, that's when you're going to get sort of growth scare act 2, and that's sort of our two steps back process.
Takes us back to the Fed last summer. We know what they did. They reduced interest rates by 100 basis points. The moment you got a freak out in the labor market, just a small one, in the summer of last year, that's when it started. they moved. Are they constrained this time?
They are constrained. There's no question about it. And, you know, even more so because they're certainly going to get political pressure in however many hours that's going to be. But the fact is that the inflation dynamic is different and at risk of being more anchored than it has been in the past. We don't think ultimately it will be, but there is that risk.
The president doesn't like it when other central banks reduce interest rates, and it's interesting that going into this one, it's not the ECB this time around, it's the Chinese.
And they're doing it pretty aggressively to pave the way for fiscal stimulus. In addition, it's basically everything the U.S. isn't doing, and they're setting the stage potentially to bolster an economy that has been flagging, but also potentially to sort of set the stage for retaliation potentially to head into these talks.
Julian, it's good to see you, sir. As always, thanks for dropping by. Julian Emmanuel there of Evercore. Look out for our coverage of the Federal Reserve. The Fed decides a little bit later on this afternoon. That kicks off at about 1:30 Eastern Time on Bloomberg TV. Equity futures right now positive by 0.6% on the S&P. With an update on stories elsewhere with your Bloomberg brief, here's Yahira Arnad. Hey, Yahira.
Hi, John. Pakistan says it has shot down 5 Indian planes carrying out strikes inside its territory. India says it ordered the strikes against what it calls terrorist camps after last month's attack in Kashmir that killed 26 people. Pakistan says 8 civilians were killed in the Indian raids and has vowed to respond. Meanwhile, Treasury Secretary Scott Bessent and Trade Representative Jamieson Greer will hold talks with China's Vice Premier He Lifeng this weekend. The officials are due to meet in Switzerland on Saturday and Sunday. These will be the first confirmed talks between the two countries since President Trump announced tariffs of up to 145% on Chinese imports. And a check on AMD shares. Those are rising 2.8% in the pre-market, despite the company warning it will lose $1.5 billion in revenue this year due to U.S. export curbs to China. Overall, the chip maker was upbeat about AI infrastructure demand and predicted strong sales growth in the second half of the year as it debuts new chips. That's your Bloomberg brief. John?
Yahira, thank you. Yahira will be back in 30 minutes or so, about a half an hour, to catch us up on the latest with Champions League football. What a game yesterday afternoon, just absolutely phenomenal. I'm exhausted. Equity futures positive this morning. Up next on the program, preparing to de-escalate.
The world has been coming to the U.S. and China has been the missing piece. This isn't sustainable. As I said before, especially on the Chinese side, we don't want to decouple. What we want is fair trade.
Talks about talks this weekend. The former senior Trump trade advisor, Kellyanne Shaw, joins us next, live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. In Insight with Haslinda Anand, only on Bloomberg.
Back-to-back losses on the S&P 500 for the first time this month. Looking to erase some of that this morning. Positive by 0.6% on the S&P. On the Nasdaq 100, higher by 0.6%. Also, under surveillance this morning, preparing to de-escalate.
The world has been coming to the U.S., and China has been the missing piece. We have shared interest that this isn't sustainable, as I said before, especially on the Chinese side. And, 145%, 125% is the equivalent of an embargo. We don't want to decouple. What we want is fair trade.
So here's the latest this morning. U.S. and China trade talks officially opening up, with the Treasury Secretary Scott Bessent and Trade Representative Jamieson Greer set to meet with Chinese counterparts over in Switzerland this weekend. Joining us now, the former senior Trump trade advisor, Kellyanne Shaw. Kellyanne, welcome back to the program. Can you just help frame these discussions, what it looks like going into the weekend?
Yeah, good morning. And this is certainly the announcement that we've been waiting for. Clear and overt signals from both the United States and China that they intend to engage in discussions to de-escalate from the current trade embargo. And so what Secretary Bessent outlined last night in his interview was that they would have 3 days of meetings. The first day would be about scoping out what the discussions would encompass. And then he predicted the next 2 days would be just about this de-escalation issue as opposed to broader trade issues. Now, that said, if you have 3 days worth of meetings with the two biggest economies on earth, they're certainly also going to be talking about things like phase one compliance, potentially talking about what a broader trade negotiation could look like. But I don't expect them to get much into the substance of that, rather just focusing instead on de-escalating from these current 125% and 145% tariffs.
Kellyanne, for China to sit down, they said that they wanted to see the 145% rate drop. Could we see that by the end of this weekend?
I would expect that there might be some sort of announcement coming out of those meetings with respect to the tariff rates. Now, going from 145% all the way down to zero, I have no expectations for. But whether we de-escalate down to something like 30, 40, 50%, I think something like that might be more realistic. And then on top of these reciprocal tariffs, we also have the 20% fentanyl tariffs, which really, for President Trump to de-escalate from, China would need to come prepared with some sort of concession, at least on the drug front.
The Wall Street Journal a few weeks ago said that China was looking into that. Do you think that is an olive branch they can offer up this weekend?
Potentially. And we've seen a number of olive branches and signals play out over the past week where China has not been collecting tariffs on certain shipments from the United States, signals from Chinese officials, from Chinese surrogates. Now, to the extent that China is willing to negotiate on the drug front, I certainly think that there could be flexibility there. Again, I'm not expecting these tariffs to go back down to zero or even 10 or 20%, but somewhere where trade can still happen and there is an opening, at least for further discussions.
Kellyanne, we heard from Scott Bessent, Treasury Secretary, we don't want to decouple. What we want is fair trade. Do we have a sense of what the ultimate goal of what fair trade looks like between the United States and China?
Yeah, and what was interesting about that comment, too, is that when pressed on some of these more national security supply chains, he did say we want to decouple from those. So it's the supplies and the production lines that we would need in the event of a pandemic, some sort of military conflict, national security event, that we would be able to produce those in the United States. But for everything else, and he pointed out textiles and T-shirts as well, that we would allow trade to continue. But I think the list on the side of the United States has been longstanding and public. And so that has to do with the things that are in that Section 301 report from back in Trump 1.0, has to do with unfair subsidization, some of these industrial policies, anything related to technology transfer, IP theft, or the manipulation of markets. Now, that's a big list, and that's a big ask on the U.S. side. And so the question for me is, what's China going to ask, and is there really scope for any sort of deal there? But in the meantime, it's about de-escalation.
As the market tries to figure out a timeline of how long this is going to take and how volatile it potentially could be, Kellyanne, what was the signal that you took from the package of stimulus that the Chinese authorities put out before some of these talks kicked off to maybe uphold its economy, but also maybe to gird for potentially a rocky path that includes retaliation?
Yeah, and I think there what you're seeing is that the Chinese government has been saying for the past several weeks that this is the U.S.'s problem. We're going to wait the United States out. We don't need the United States. But in reality, behind the scenes, there's quite a bit of anxiety and nervousness there. And that's why we've seen them now announce this package of financial measures to help with their own economy. But I also think that it signals what Secretary Bessent has been saying out loud for some time now, which is don't look for a huge U.S.-China trade deal in the short term. These are the two biggest economies on Earth with long-standing entrenched issues. This is going to take years to work out, not just days or weeks.
Kellyanne, we know the Chinese like to drag things out. It took 18 months last time around. I'm just thinking about the individual demands, just to build on Lisa's questioning. When it comes to these talks, I know what the U.S. wants. They want to address things like fentanyl. They want to address the trade imbalance. Maybe they revisit purchase agreements. It's the ask from the Chinese side, which I think are harder to follow through on, actually. When they ask for things like lifting tech restrictions on U.S. technology, isn't that going to be a red line for negotiators over the next several months?
Yeah, and that's why I think this is going to take a much longer period of time to work out if it is able to be worked out. Asking for the lifting of export controls, investment restrictions, some of these human rights related legislation, all of this is going to be incredibly difficult for any U.S. president to do, in part because the mood of the country has moved so significantly into this bipartisan consensus about the challenges posed from China that there isn't a lot of runway there. And so I think that these are going to be hard, if not impossible, asks by China. So that is why I think we are in for what you said to be a rocky road for the next couple of years. But in the meantime, the administration is focused solely on this de-escalation. And I think China is also focused solely on this de-escalation so that at least some trade can continue between the world's two largest economies.
Can we just think about the other economies before we wrap this up? What Pantheon Macroeconomics calls this morning satellite manufacturing economies of China, the likes of Vietnam. Who are they closer with right now, the U.S. or China?
So a lot of the Southeast Asian countries, including Vietnam, see China as their #1 trading partner, which is true just in terms of pure trading volumes. But I think they're stuck between a rock and a hard place. And most of these countries are asking not to have to choose between the United States and China. They see both as important trading partners, both as important allies. And we're seeing this play out in these negotiations that are happening with the U.S. administration, where they are asking for concessions and asking for countries to ensure that Chinese products aren't coming in and aren't circumventing potential tariffs between the United States and China. And that is a hard ask for a number of these countries, but I don't think that the United States can agree to some of these deals unless these countries agree to their own measures to stop Chinese goods from coming in.
Kellyanne, I have a feeling we'll be talking with each other for a long, long time about U.S.-China trade talks. Kellyanne Shaw, the former senior Trump trade advisor. Kellyanne, thank you. Anne-Marie, one of the first moves from the Chinese leader, what was it? To secure ties with some of those economies.
Absolutely. And when it comes to usurping around what the United States has put up in terms of the tariff rates, China's already doing that. It's called washing. They're throwing goods, dumping into other economies, and then telling those economies and those manufacturers, send them to the United States.
The fact they're talking is good news. The bad news is they might be talking for a long, long time without the policy changing. Equity futures right now positive by 0.6%. Up next, Bloomberg's Rishi Bhatia as India and Pakistan trade military strikes.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episodes this spring, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Equity futures positive here by 0.5% on the S&P 500. On the Nasdaq, up by 0.5 also. Some outperformance on the Russell. The small caps up by 1 full percentage point so far this morning. Early days, 3 hours to go until the opening bell with your morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. The earnings season rolls on. We had AMD after the bell yesterday. What a ride it's been for this company. The report's results gave a very upbeat forecast and shares rose 6%. But at one point, they turned around and they started to fall after the company said it would take a $1.5 billion hit because of U.S. restrictions when it comes to Chinese chips. This is basically the biggest competitor to NVIDIA. But that loss turns around to gains again. We're up 2.4% this morning. But what's decisively down in tech is Super Microcomputer, also reporting earnings post-market yesterday, giving a disappointing outlook, a disappointing set of results. And it's surprising it was this disappointing, considering that they pre-warned the market last week saying that things would look lackluster. Orders for them have been delayed. They make servers that you need to use for AI, saying that it also might be because of economic uncertainty and tariffs that is impacting them in the short term. So those shares down 5% this morning. Finally, we also heard from Novo Nordisk this morning. It actually cut its guidance. But look at what the ADR is doing. It's up nearly 5%. It's even up more in the Danish trade. And you also have other pharmacy stocks rising with it. Eli Lilly, which also has its obesity medication. And that's because Novo Nordisk said that the competition from compounding pharmacies, it assumes, is going to wane in a big way later this year. The shortages are gone. The FDA rule that allows those compounding pharmacies to make obesity medication is going to start to pull back. So you're also seeing Lilly up 1.7% on that report, John.
Danny, thank you. Great work as always. More from Danny in the next hour. On a radar this morning, one of the top stories worldwide right now, India conducting military strikes against, quote, known terror camps in Pakistan in response to a militant attack in Kashmir last month. A Pakistani official telling Bloomberg his country shot down 5 Indian fighter jets.
There's a lot of concern here that this can potentially become more of a hot situation between these two countries. Prime Minister Modi has said he would retaliate. He said perpetrators that would be punished for that attack in Indian-controlled Kashmir. The United States has been trying to de-escalate this for days. Marco Rubio, a number of readouts from the Secretary of State last week between Pakistan, between India, and at this moment, it wasn't able to work, but potentially they are looking for some sort of off-ramp right now.
I think a lot of people are, considering it's 2 nuclear powers that are right next to each other and have contested this area for a long time. Pakistan has emphatically denied that they were responsible for an attack on mostly tourists in this contested land. The discussion has been very careful, and the rhetoric has been careful. There has not been a desire to escalate, and what happens, though, when you start with these types of tit-for-tats, sometimes things can get out of your control.
We had a flashpoint for tensions a number of years ago, I think back in 2019, and things de-escalated pretty quickly, and we hope they can de-escalate pretty quickly all over again. We'll have you an update on that story in about 5 minutes' time. I want to turn to this one. U.S. Treasury Secretary Scott Bessent and Trade Representative Jamieson Greer traveling to Switzerland this weekend for trade talks with China's Vice Premier. The talks aiming to de-escalate the tariff standoff.
And we just talked to Kellyanne Shaw, who said essentially de-escalation might mean the beginning of talks that could last years. Meanwhile, we have China's Commerce Ministry calling for the U.S. to show sincerity in these talks. You have Scott Bessent, Treasury Secretary, saying we don't want to decouple, but what we want is fair trade. It is very difficult to see some sort of contours of an agreement coming together quickly. Is this enough to really justify some of the reprieve that we seem to be getting in market pricing, if not in actual policy?
A deal would take a lot more time, but Kellyanne was pretty, I think, accurate when she said, given the fact that a number of officials, especially Scott Bessent, said these rates are unsustainable. At the end of this meeting, what you potentially could see is the drop in rates. And that is going to then be, I think, in earnest, a starting point to have these trade negotiations.
That's implied by how both sides have approached these talks about talks. To your point, the Treasury Secretary has said they're unsustainable. From the Chinese side, they have said they're not willing to engage in real negotiations until those tariffs come down. So the question we've got to answer is, come down to what?
Exactly. And I think you have to go back to what the president has said on the campaign trail, 60%. I think somewhere between the 35, 40% to 60, 70, 75% maybe will be an acceptable rate. But in that, a lot of analysts say that is still an embargo, basically, in terms of trade between these two countries. Most interesting about Bessent last night was the fact that he said, we don't want to decouple when it comes to the knickknacks, the textiles, but it's about decoupling when it comes to really important national security sectors.
The market's just happy we're de-escalating, that we're talking. It's difficult to escalate any more from 140-something% on Chinese goods. The market might need more than that in the future, though, and this is what the economists are focused on. I think that's the difference right now, Lisa. The difference between what market participants are focused on, talks about talks, and what economists are focused on, which is the prospect that the trade volume coming into the United States rolls over and you start to see the empty shelves.
And what does the sort of CEO have to say about this? Did you see the numbers out of Shein and Temu? They were down dramatically in the week from April 25th to May 1st. Shein's sales dropped 23% in the U.S. in that period versus the week before. For Temu, it was 17%. So you can see a real material response as prices go up that consumers are really pulling back. So things happen in the meantime. It's not like this is a static type of negotiation.
Well, with closing of de minimis, which means that anything under $800, you don't have to pay this tariff rate. With the closing of that loophole, there is literally no point to going out and buying some of these cheap Chinese goods. So the big question is, where is China going to be dumping so many of these cheap goods? And we're seeing in a lot of these Southeast Asian countries.
More on the talks throughout this morning. It is helping the equity market. Equity futures positive by 0.5%. We need to wrap it up with the most famous succession planning on the planet. 133 Roman Catholic cardinals gathering in the Sistine Chapel to elect a new pope. They will not be allowed to leave until they reach an agreement. Once the conclave reaches a decision, a plume of white smoke will rise from the Vatican roof and the new pontiff will be announced.
Just want to point out that it's 133 cardinals from 70 countries. That compares to 115 cardinals from 48 countries the last time around. So this is going to be a really volatile type of session. They're not allowed to look at their phones. They're not allowed to have any external communication. In 1268, it took 3 years. I assume it'll take a little bit less time this time around.
Fumanta Bianchi, and then what they have is the ringing of the bells in St. Peter's Basilica, and everyone literally gets so excited about this. I was reading this story about actually, and Jonathan, you've talked about this, the numbers of the youth actually turning back to religion and Catholicism, and this potentially, I think, because some of this has also been made into seasons on movies and on television, there's a lot of excitement. What I find interesting about this, though, is that this is a moment for the church to decide. Do they want to lean into more of this Jesuit, liberal, progressive branch, or are they going to go to a more conservative marking? And they have an opportunity here. And someone in Washington, D.C. once told me this is the most important, ultimate whip count that you'll ever have in your life.
Looking for a 2/3 majority. The first vote will be this afternoon. We'll keep you updated on that. Let's turn back to our top geopolitical story. India and Pakistan trading military strikes, raising fears of war between the two nuclear powers. Joining us now is Bloomberg's Ruchi Bhatia, joining us from New Delhi. Ruchi, welcome to the program. Let's just start with what either side is saying this morning, both on the Indian side and on the Pakistan side.
Well, this is really the escalation of hostilities between the two nuclear-armed nations. In fact, just a while ago, we got a statement from Prime Minister Shehbaz Sharif's office, who said that he has given a go-ahead to the Pakistan army, and they are ready to act against India. And this after India said that they had conducted military strikes in Pakistan and Pakistan-administered Kashmir. This, of course, coming in the aftermath of gunmen killing 26 people in India-administered Kashmir, one of the worst civilian crises and one of the worst civilian attacks that we have seen in the recent years. Of course, Indian side as well as the Pakistan side both engaging